Good morning. It is June 9th, 6/9/2023. We're going to be streaming stocks, options, futures, looking at technical analysis, watching the SPY, watching GME, BBYQ, whatever we've got going. Looks like eBet's up pre-market. SPY's at kind of a critical spot. Wow, and it's ripping. Tesla had bullish news. I guess Ford and GM are both going to adapt their ports on their vehicles, which is kind of huge. I think that's what it was. Or maybe it was just that Tesla's going to allow Ford and GM now to use their chargers. One or the other. Either way, Ford and GM are probably going to have their plugs on their cars now, or maybe an adapter, but whatever it is. Tesla's ripping on it 6%. So it's having a big pull on the SPY. Netflix announced something or released something about their earnings with passwords, crackdown, increased. I don't know what they said, but it's causing it to rip. Those are two large mega caps. Big pulls in the SPY. So really, I mean, we've made a bull flag, and the bull flag is above prior resistance. So seems quite possible that we just keep ripping actually. But we'll see if we get kind of a reversal, some sort of reversal pattern up here today. We come back below it, then I would think it's probably the top. But if we get kind of a breakout and use this as support, as prior resistance, which we're now gapping above, then I don't know. I think it's we're due for some more ups, more uppity ups. Have about 5 minutes open. You guys are all sharing big pre-market on barbecue. CD's not showing anything on barbecue pre-market. That's what's so weird. And German market still saying it's down 9.29. So I can't get a very good read on barbecue's pre-market or post market. Yeah, I don't think it's having a gap up right now. We're just having to settle. Got JH Trades in on the barbecue train. Thanks guys for your pre-market likes, I appreciate it. We're at 15. Let's see if we can get it to 25 before the bell even rings. Like the new thumbnail, that's the early bird thumbnail, my yacht. Good morning. Morning, Keenan. Happy day to you too, Aware. Glad you're on our Discord, glad you made it. Morning, Buzzin'. Morning, Mo Lava. Morning, Owl. Buenos dias. Morning, John. Twisting my dear Watson. Yeah, I don't know. The tweet, I don't know. Airbnb's up 4. What's happening there? The heck? Good morning, Dragon. Good morning, DIY. Got another play. Let's hear it, Sterling. Let the morning settle down a little bit, then I want to hear about it. All right, Keenan. Well, that's nice of you to do it, Fire Marshal Bill. Don't wanna push my luck though. Maybe just try for like 2 likes a week. Slowly work it up to like maybe 3. IP is still doing well. Yep, IP is strong. Pack of Spies kind of ripping here pre-market. We're at 20 likes. We're getting there. You guys can do it. here. I'm liking the short on the Qs better. It's way more extended than the SPY. So watch it a little bit. Thanks, John. Appreciate the like. Ron will delist SOL. What do you mean Robinhood will? Not usually up here brokerage. Not sure what you mean. Upstart. Yeah, this thing's had a crazy run. Crazy rally. Actually got weekly puts on it. Should have closed them yesterday. They're up 20%. I just held them. So we'll see. I'll look for a dump today on them. I don't think barbecue's up pre-market. I know you guys are seeing that. I think it may be down actually. E-Trade says it's down 1.3%, so I think we'll open about where we closed. Oh, let's see. On pre-market. 1 minute. There we go. We're open. SPY's ripping. So opened up 1/4% and it's squeezing. Not really any resistances to look for. Just have to look for some DA to see if it is going to have reversal up here. Yeah, we're off into Never Never Land up here. Let's see. Up 1/4%. Barbecue totally flat. Loop TV is up 9.25. Yeah, GME is rallying 2%. All that volume yesterday was pretty peculiar. Maybe the drop in the stock price will be not for long. Nirvana 6% up. Bit of a gap up on it. I think we get maybe a reversal down SPY since it is gapping up. But we'll see. Maybe it'll come down and show a bullish trend back at support. Airbnb's up pretty good. Etsy's up. No barbecue news. No. SPY's horny. Is that you, Subway? Yeah, we've watched Upstart. Sure, but yeah, I remember you specifically typing up. There's someone, I guess it was you. We did well in that up trade. I actually put on my watch list to start trading it. It was right here. It was this move or maybe this move. One of these would killed it. It's actually looking bullish again. It did just have a reverse split though, so not the most bullish news. Carvana moving again. Breaking out. Oh, and I actually need to watch Upstart. Got weekly puts on it. Like you do. Barbecue. Flat still. Peloton up almost 10. Airbnb up 6. It's great stuff. I'm glad you mentioned that because I remember that and I couldn't remember who it was. It's like someone, I've thought about that before. Beautiful chart. What could I say? And I continued to explain it to you because you kept asking. Sarcasm doesn't come across very well with text. Flat on barbecue. Spies still reaching for the highs. Upstart's down 2.4. And for a low, this one to sell it. It was good I held. Carvana 12%. GME rejected that 22. Carvana's breaking the high. I don't know what this. Yeah, it's breaking some resistance. Good volume on it, 6.7 million. Wow. I never knew you were actually trying to type in Upstart. I didn't know you're actually trying to specify ticker. It looked like it was almost even part of a sentence. AI, what the heck are you doing? This thing looks like it wants to keep trending. What? Oh. Yeah, you're broken. Barbecue 0.5% green. Rejecting that 22.16. Barbecue the green. On a 10%. Loop TV 9. General Motors up 5.5. I guess that's that with that Tesla news. Peloton 13. Ripping. Yeah, Peloton's breaking out of that bull flag right now. Looking at Ashcard puts on this, I think so. Yeah, it hit a nice historical support here. 6.5. A little cup here and handle. Whew. 14% on Peloton. It's just overvalued still. Do some revenue. 3.3 billion. Odd things ripping. Piranha, some profit taken up there. Yeah, Mavis has gone crazy, man. We've been watching Mavis for weeks. The thing is just never ending. There you go, barbecue. Waking up a little bit. 2240. 6.7%. back over that 2340. No business being down here. For shame. Oh jeez, Subway. Dang man. You had a couple $100K on it? On Upstart? Guess that's that the pickle influence? GME rejected there. Peloton looking noise. I'm gonna let Upstart simmer a little bit. Back West down 2%. This might have a reversal though. This thing's crazy. The intraday moves. Old packy. Going down half. This thing could still keep climbing today also. Notice Dish was down pretty good. If there's any news, I like this chart. And the financials on it. Could even average into this. Suppose I could still average into coin. Here's me. Ripping higher now. Tesla up 5.5. AI 6. Dude. I didn't hear it, Ace. So I have no way of knowing. I mean, you're good with audio design. You could tell, just as good as me, better than me probably. I would assume so. That would be crazy if you did someone fake and like totally tried to play it off. But you never know. Internet people. Barbecue 7% there. 22.48. Be nice if we had a nice big green Friday. A little change up instead of a red Friday. I mean, we had our red Thursday, I think, instead. Yeah, Carvana is nice. Looks like it's rejecting though. See if you get an intraday move again like this. Start to look for that 5-minute momentum, VWAP, MACD, whatever you use. After you get some early morning profit takers. And then you're off to the races once more. Gave us up 1%, dude. This thing doesn't have when to quit. Ridiculous. Upstart's going up now. Let's repeat the pattern where you come down a lot the next day. Those are my favorite. Like drinking an ice cold Coke. Barbecue back down a bit. Oh, just cruising back to VWAP. It's still up 2.5. Peloton 15. Like this Peloton trade. Just ripped right out of open. Gotta be quick on that trigger. You don't have calls from yesterday? It's like literally put your order in before the market opens. Upstart. Interesting. Have a delay and be crackled a bit. Yeah, like I said, I didn't hear it, so I'll have to take it at what you have. I don't. Or do you think it's fake? Buy is ripping 430. Wow. There's a bull flag breakout right there. See if it's a false break. We get some kind of reversal up here, either a inverse cup and handle or a double top or a head and shoulders. Or gonna take time though. There's a lot of volume, a lot of momentum. Very well could just come down and do a normal cup and handle or some kind of bullish pattern. Yeah, that's a big level to break. Upstart's actually green, 1%. I've had 2 green days in a row for 2 weeks. SPY is my favorite meme stock right now. GME 27, 21.74 up 1.3. Nirvana 7%. Good volume this morning on barbecue, I think. Yeah. Dip buyers, AI is up 7. Peloton holding 16%. So 5%, but coming down some. We're going to be up 4.8. On phone up 4.3. All that volume on barbecue. West down 2.6. Netflix up 2.5. This was on news also. Bit of gap up on there. Real. Yeah. Seems, I mean, I would just assume it's real. Hang up 9. Peloton still going. Barbecue back down 21.01. Lightly green. The volume this morning is pretty solid on it though on BBYQ. Coin's trying to climb. West down 3.6. IP is flat. How high the VWAP is on Ellie. EO. Thought they sold off from their earnings. That's nice. This chart looked bullish. Just waiting on earnings. Let's see. Reports weaker than expected Q1 earnings, gross margins fall. So missed expectations. But chart looks too nice. It just had to rally. We have good news and dump. Bad news and rally. There's other news of like insider buying or something. Oh. Interesting. Gobi's ripping. Up 7.8. Wow, that thing's had quite the rally. Lyft, looks like travel stocks are up. Rivian's up 4. The Tesla and Netflix, like double whammy, is just pumping the SPY. And other EVs and everything. Revision. He doesn't know when to quit. Borrow fee still high on MBIS. 64%. They go in and out of available shares. BBBYQ back to flat. Volume's staying pretty elevated on BBBYQ. Fubo's up 3%. GME hanging out at 1.7. Palantir. Green. What's red today? My list. Up is down. Dish is down. What's going on with Dish? Kind of volatile. I want to make a new high there. That's down. Micro Vast. Barbecue's now red. 2075 down 1%. Not a good look for a little morning liquidity pump. It turns out to be. GME starting a rally. 2.8. Buy new high of the day. GME new high of the day. 22.13. Up 3%. $431 on SPY. SPY squeezing. Market's too green for Upstart to even go down. Not too green for barbecue though, it can go down. GME 2213. Hoping this thing has a little reversal today, maybe a little double top. Start up 2%. The new high from yesterday. Is it gonna break the pattern on the day that is today? The day that I trade it? Win rug? I don't know. I mean, some would probably consider we've already been rug pulled, given that it's at 21 cents. So, I guess if your rug ends at 0, maybe after these deadlines for the Chapter 11. Otherwise, I think it's going to hold up somewhat decent price. GME up 3.25. Genius is down 3.6. Barbecue looks like the volume is kind of sustaining, which is good. GME broke that high. 22.26, up 3.8. This chart is all over the place now. Peloton consolidating from the bull flag. Neo's up 10%. XPEV 10, Joby 9. Wow, dude, the market's just getting pumped right now. Even the AI stocks. Fubo's up 7. Went up 1.25, 1.5. Highs up 7. GME still trying to climb. SoFi broke that resistance at 8.25. Up to 8.6. There's the other resistance at 8.5. Now you're looking at a gap fill like 9. 909 is a tiny gap. My bull flagging up here. Wait, is there like news going on? A lot of exuberance for this Friday. Open it up for retail to dump on them, I bet. GNR. Oh, Generac. Yeah, the generators. Thanks for sharing your play, Sterling. Everyone follow Sterling's example. Open to play, share it in chat. 145 is quite the ways out of the money. Chart. Fine. Not any bit too exciting. New high the day they're on SPY. Hey, Dragon. Morning to you. Thanks, guys, for joining. Just hit 10 o'clock. We're at 26 likes on the day. I appreciate it. SPY's on a moon mission. This option's even up. Quit. Getting weeklies, huh? It's so far out of the money, Archer. Why? Wait, what? I don't even see that strike. Oh, never mind. Look at it somewhere else. It's laid on there. Barbecue down 1 point something. 1.5. Upstart's up 2. The options chain here. I don't see any volume there, Sterling. But that's what you got? Oh wait, never mind, you got weeklies. Weekly. Oh, that spread is awful, man. Yeah, yeah, you didn't get a bad fill. 50 cents on 45 to 75. Got a pretty good fill. Be weird Friday indeed. Just looking at the chart, it's not overly bullish, but what would be a catalyst for, oh, hurricane season? Oh, I'd want more time for that. One I think probably rallies during hurricane season. SPY ripping there. New high of the day. There's a monthly chart on it. Do you like this TA? Yeah. You like that crossover probably. Gonna add a Wyckoff accumulation. You're going on TA with that. Well, I want to keep watching it. For now. Peloton. 15. GME is ripping 6%. Whoa. With volume. Upstart's 2.75. Ah, we suck again. Are you gonna do that, Upstart? I guess the dip buyers are being rewarded on GME. So far. Coins up 2.6. Quest is down 2. AP is flat. This is down 4. Peloton 15%. GME's fixed. It is. Hate it or love it. That's all I'm seeing. If SPY's setting up something up here. Look at that VWAP, how high that is. You were talking about Robinhood, so it's ending trading for Cardano, Solana, and Block or Polygon crypto tokens. 56% of Americans think earning a 4-year degree is a waste of time. Investors withdrew a net $18.84 billion from global equity funds, the largest weekly net selling since March 15th. UBS has signed an agreement with the Swiss government to cover up to $10 billion in losses from its emergency takeover Credit Suisse. Wow. Hey, Josip. Morning. Thanks, Ace. I just got him. Top's getting toppy. Well, not toppy. Bottomy. Yeah, there you go. 5%. This would this would kind of confirm that that Wall Street Bet Elite DD. Top or HKD rallying before barbecue. You guys read it? I was like, when I read it, I was like, well, if Top's gonna rally 11 days before barbecue, why not just buy Top? I think it was shared on our Discord. Top is going though, 7%. And that is tempting. I gotta play with Top. $9.18. I got some shares. Good call, Rally. If I lose money, you're banned. The way it works, man. Little resistance spots there. Let's see what we got. Nice volume. I like it. Upstart's starting to come down. Peloton's ripping. More 18%. Breaking out there, 19% on Peloton. Definitely didn't bite on the consolidation. Bought it on the rip, so. But it's Chinese. What you gotta do. Actually, the spread didn't seem too wide. No, the spread's somewhat tight on it. Weird. I still climbing up. Thought we were doing maybe an inverse or a head and shoulders, but nope. Still charging away. This is funny. Yeah, I gotta look at that DD. Look in media. If you guys are on our Discord, anything that's not media basically that you're sharing that you don't share in general, like words, it probably goes in DD. Media is for like strictly media, like news articles, Twitter post, like actual media. Anything that's like for research, pretty much. If everything on Reddit should be in DD, unless it's like a meme or something or just something to laugh at. It's actually media, but otherwise, pretty much anything on Reddit should be on DD. You guys get scared if not many people are sharing DD. Everyone shares in media. GameStop 7%. Dude, things rallying, man. With a solid amount of volume too. Really weird. It's a fixed rally though. It's not anything squeezy. Not yet. Well, congrats to you guys that dip bot. You guys dip bot with shares. Some of you guys are getting calls. Those have got to be up pretty good. You're still holding Top? Oh, jeez. Sold Carvana, got Neil. Spies ripping. Yeah, no, that's a good sell on Carvana. It still could wake back up today, but got a good sell on it. And Neo, like wait, was it Neo that was? Neo's chart just looks nice. I don't like this line, but Maybe it'll break that. There's that other chart that just broke the highs. Bye, new high of the day there. A summary of the DVD. I mean, basically, HKD and top are used for liquidity or collateral, and they run so many days prior to BBBYQ. It's similar DD than what we've seen to GME also. But yeah, so they're predicting a run on top or HKD, or actually they were saying that that's already happened, and so we should get a run on barbecue, because they were counting, I think they were counting 11 days from maybe this, or maybe it was on HKD. Yeah, I think it was on this one. They were counting 11 days from this, so they were giving up a run range for barbecue as like next Wednesday or Thursday. That was just one part of it. It was a Wall Street Bets Elite post, so it wasn't just about that. It was about other things with barbecue and what's bullish about it. That was one of the arguments, though. 100% sure, huh? Yeah, it's looking nice. Nice consolidation up there, maybe above VWAP. It's got the push of Tesla. I mean, they missed their earnings even. Tesla's 7%. Wow. Dude. I might have to trim some of my Tesla. This is crazy. Keep waiting. Last time I sold it was like 400 something. It was before that split. I can't remember, somewhere up here. It wasn't 400. 380 or close to that. It was like 900 at that time. And we had a split since then? Yeah, right here. 3 for 1. Yeah. Wow, Tessie. 7%. I mean, we knew you had it in you. But you just picked this Friday, huh? GME finding some resistance there. Solid volume. Very quickly filling that gap. Need GME at 34. Yeah, Tesla in the 60s I like too. Big buyer in that range. Fubo's up 7, AI's up 7. Wow. Is this one of those big reversal days? Or is it just gonna close with a nice big green candle? Are we gonna see a wick, a red candle? Yeah, well done, DIY. Yeah, a lot of you guys did well buying the dip on GME. The chart has nothing to, this doesn't speak to me at all, so it would just be like, oh, it just dumped a bunch, I'm gonna buy it. Which I try never to just do that. But yeah, it's working out well for you right now. Nurture those gains. The 8 point is ripping 3.8. I can't believe I didn't double down on this thing. Could have had like a crazy good average in. Up above my strike on my cash secured put now. The gap is filled on it? No, not quite. Back west down 2%. AP's now green 1.25. I'll sell off. Up. Consolidate nicely. This is where I should have bought it. Consolidating on the VWAP. I'm mooning. Hey, MT. Tide is about to turn. Getting ready for the dump. 41.50. The July. Maybe. It is summer though. Market moves. It can come down in the summer, but usually less volumes, a little slower. Peloton's chilling out a little bit. What is this exuberance? Low. Might get some GME puts. 8.5%, dude. Look at this thing. Wow. Great volume too. I want to see it get squeezy. Old time's sakes. .8 on GME. Last time we saw 8% on GME. Intraday. Which guy's golfing this? Hey trader. No brainer. 40 calls. The volume on the options? Oh, you're saying the volume on GME. I know the volume last couple days. I mean, I guess I don't see it as a no-brainer, but because we had big volume with big sell-off. A pretty big sell-off day before earnings. And then yesterday's was just big volume, but not a whole lot of move. I don't know. But yeah, it's working out for you. 40 calls is super ambitious. Why do you get so far out of the money? Up, start to reverse. Like top is kind of going a little bit. Spreads are widening out on top. Volume's chilling out. 10:22. Thank you guys for your likes this morning. Pretty exciting morning. We're at 31 likes on the day. Tesla 711. 323. Kind of resistance there on GME. Everybody calls it more than 1 cent. Obi's up 10. Barbecue just simmering. Love too much of video songs. I don't have the names. Let's see. I don't even know. I don't even know what they are. Sorry. 3. Go upstart. Let's see a flush through VWAP. Nice, Sterling. Well done, man. Yeah, I guess if you're trying to get some squeeze exposure. But I just like to see GME be broken again. He was up 1.2%. Big fake out. Everybody saw that engulfing candle and they're like, yep, we're pumping. One last little pump. Wreck all your puts. Real move will be probably next week with Powell. Maybe kind of a Maybe kind of a boring, choppy week next week. I'm not sure. Maybe little downs, but the market will probably wait on that. Make a nice little bull flag here. B 4.6. Back west 2.8. Base up 3.6. Almost filled that gap. Been a nice dip buy on Coinbase. Similar to GME. Me just doing it a little faster. Wait, you bought in for 75 cents and sold it at 99 cents? When did you buy it today? Early? Not quite an engulfing candle up there. I might move back to VWAP. Fill out a bit. So they didn't move much at all. Because they're so far out of the money probably. Guess you had a pretty good amount of time also. Yeah, November. Makes sense, I guess. Is there any liquidity that far out of the money? For November? I hate all the strikes on GME's chain. Paper just had the reverse split. 1 for 12. Yikes, that might be a good short. We'll see. Kind of at that support. If it breaks there, it might be a nice short to take. QuantumScape's at a really cheap price, isn't it? Pulling out up here a bit. Bull flagging still above VWAP. Lost momentum for now. QuantumScape. I don't know much about this company. I don't know if they have any numbers in here. GME bull flagging. Upstart just consolidating a VWAP. Oh, top broke through VWAP. Great. Buy the day they're on SPY. Peloton. A pretty aggressive trend this morning. GME settling down a bit, 6% on that. Let's pump be over. Barbecue's flat. Impressed with this coin rally, it's up 4%. E is green, 1.8. Back west, I bet it's gonna go green here. Down 1.5, but it wants to fill gaps, it wants to go up. At least find the top of this range at 930. Carvana's actually holding up really well. Little head and shoulders there on the 5-minute, but that happened yesterday, and it gotta just look out for if it breaks that shoulder or that neckline. It didn't. It broke to the upside and then it rallied. So head, shoulder, shoulder. But the option premium is pretty crazy though. Might open a spread on here though. It's time. I maybe set up little head and shoulders. They is very upset with Tesla's movement. All their covered calls getting wrecked or what? Upstart's starting to come down. Eyes breaking out of this channel a little bit. See more of a head and shoulders on the Qs. Holding 4%. Upstart now red. Carvana now red. Trying to get an order filled on Carvana. Okay, it filled. Let's see, it's a July monthly. Oh, what the heck? I got January? That's why it was so expensive. Dang it. I'm gonna get July. Oh, I skipped over that one. Jeez. I haven't like traded options on E-Trade in a while. Weird. Wait, what? January. Yeah, January. What the heck? Why did I get January? Why is July so expensive? Okay, got double the exposure on Carvana. I might sell those Januaries. It's a 22.5, 15. Put debit spread. Expensive. I should probably sell the Januaries. The Januaries are 15.20 put debit spread. Yeah, I'm using up all my margin. I'm gonna sell these Januaries. back what I need in commissions. Guys coming down there. Jump out of top also. Top actually doesn't look too bad. Well, buying power for futures though. I think it's too early to leave his blind date or 23 relatives at a restaurant. That is awesome. I totally want to do that. I have to find 23 relatives though. That's no easy feat. 23 relatives to get to go on a blind date with you? I mean, is that even possible? Alright, Spine's kind of moving down through VWAP here. Up at a top. Up to manage today. Upstart's now starting to flush. You can buy SPY for 432 puts, absolutely. A very safe bet, in that they're pretty deep in the money now. New central bank governor for Turkey. Suggesting interest rate hikes. So I grabbed some shorts on MNQ, which is the futures for the NASDAQ. The micro short. I'm gonna try and get some more. I think we'll probably get retest on that shoulder. Got a head, shoulder, shoulder. Maybe not though. Maybe just a move back to VWAP. Grab another one. MEQs move nice because typically NASDAQ probably has greater moves, larger moves than SPY. Barbecue's flat. Kind of came down some, down to VWAP. Pull the GME 23 call. Pretty much, yeah, GME's had quite the bounce. I think it'd be all right. We just saw it yesterday. We're getting a green to red day potentially on market. Oh. Things settling down. Barbecue so flat. Bear Creek. Got a bearish MACD now on the 5-minute. Red under the 9. We're under VWAP. Setting up a little bear flag here. Wait before I add. Yeah, I like how these MQs actually move. even more than the micro ES. They're a little bit more leveraged. The micro ES I think are like 24K. These are 29. And the Qs move. Nasdaq moves larger. And right now Nasdaq's had way more of a pump than the SPY. Expected it. Oh shoot, I don't want to do that actually. Day trade on that? I'll just hold it. I'll hold that Carvana, put debit spread till day. Little bounce up there. And for 431.60 range for kind of the right shoulder here. See if it holds below that. Otherwise, we're just still on an upward channel. Alright, I added a micro ES margin for another M and Q. What do you got there? Cool. Bed Bath & Beyond in Espanol? What is this saying? About their store in Mexico? Viva la Mexico? Bed Bath & Beyond Mexico has reportedly profitable and healthy finances as independent entity from the U.S. brand. Recently filed for Chapter 11 bankruptcy. Will continue operating as 12 stores in regular terms. Can we see their earnings? We can't even see ours in the States. Ace, can you read this? I'd rather use the power of the chat. Translate. Barbecue's very flat. I want to get SPY puts too, actually. Leverage up on this short. Got burned so bad yesterday. So bad, but fun. Yeah, I got some SPY daily puts too. Look for a gap fill maybe. Or at least We'll see at the this high is 429.58 area. What we got? Oh, welcome, Crick. Thanks for joining, man. Did you subscribe? Thumbs up? Did you get in our Discord? On the whole thing? Oh yeah, I'll jump on the audio. If you guys aren't on our Discord, oh, because you're part of the happy crew still. Uh-oh, Sweet Lou. I have to take that roll from you. Thanks, guys, for your likes. Appreciate it. 38 on the day. 39, well done. Pretty exciting day for the market. Big rip. Seemingly a false breakout, but we'll see. If we find support down here, the previous high might not be a false breakout. BBY is now selling babies items in Mexico. Huh. Is that because they don't have Bye Baby down there? Investors in Mexico ready to buy the chain? Thanks, Craig. Appreciate it. Might take a roll from me. Well, you see there, Sweet Lou, you are not a member anymore. Maybe Ryan? Maybe Ryan Cohen's a Mexican. Turn Mexican. Quick up there on SPY. Merger Monday. So they just moved the stalking horse from what, yesterday, Thursday to Sunday? Kind of weird. Don't imagine they'll be working on Sunday on it, so really just gave them today and maybe tomorrow, but even tomorrow would be kind of unusual. Well, at least it's not just disappeared like all that was spreading around yesterday. There's no more deadline. Wine sold off. Almost filled the gap. Get it, coin. Dish down 5.3.
The ego on you.
Ego on you. Thanks, Ace. Appreciate it, man. How in the world did you get Sweet Lou? What? No way. Are you able to... Are you... Come on. Ace, are you sniping? Sniping, dog? I don't know how you do it. Thank you, Ace. Appreciate it. Fire Marshal Bill. Very gifted membership. The Sweet Lou. Just on cue, there's Dink with the butterfly. Oh, remember we followed Bangley on Sunday? That's true, dude. That was so jacked. Do that on a Sunday. Yes. Lucky guy, I guess so. High bouncing up there a little bit. Testing VWAP again. If we get a little inverse cup and handle here, maybe. Looking like that's what's happening. What is this? Cool. Tummy time fun. Baby and kids. Not play gyms. Look what I can do. Yeah, a bunch of baby stuff at Bed Bath & Beyond. Is this new? Not unusual for them to have a baby and kids section. I guess it's a little unusual that they have that when they have the store Bye Bye Baby. Bye Bye Baby has its own website and everything though, right? Kind of weird. I'd have that. Do we have any more of those 50 plus days? Oh yeah? Plus that's what you're looking for, huh? Me 5%, 50. Barbecue, little green candle there, freaking out of its barcode. 1% up, 21.24. VWAP's just above it. Wow, AI big turnaround. Coin, yeah, it's a green to red day. I think I'm gonna hold my shorts pretty long time today. Urza? Breeze? 8% on this old gal? Price target raises. Earnings. Nice. What is this company? Oh. IT. $0.21 on barbecue. They lost less money on their earnings. Nice. Yeah, Neo actually had bad earnings, but it was ripping. Who was guaranteeing Neo to 10 again? What's that? Need Upstart to accelerate this sell-off a little bit faster. Nirvana's now down 6%. Maybe it's just consolidating up here. True champ. Why have I been not selling in BBY? Is that new though? It is new? Oh. Maybe because, well, yeah, I don't know why that would be. I'm gonna add to these spy puts. Love doing market orders on options. Truly a gift. Getting the, what, the 429 dailies. It's still early, I mean it's only 11 o'clock, but I think we've got our sign of a head and shoulders up here. Now an inverted, maybe cup and handle deal going on. Below VWAP. Fine. It's volatile, man. Well, I still have time to average down, I guess. Dish is down 6.3. Get another retest of that like 6 level. Probably average into that one too. Back west down 2.5. Don't think I'll need to average into this. I'll probably just close at some point once it gets filled. Got 6.5 strike on here. Unless there's bad news, it should be fine. Gonna double top up there. I'll just take it at this point. One of those options where it goes by 5-cent increments, so okay, out of the pack west. I'm gonna start updating the Theta Farm membership with all my Theta option plays. Thanks for your likes, guys. We're at 40 likes on the day. All in on UVXY. Depends on how today closes, Doctor. That's kind of what I'd like to see, because we might be getting a green to red type of day. That's the case, and yeah, I don't think it's going to be going up all week next week. If we do bounce off kind of the breakout level here, what was it? $4.29. Wait. Yeah, $4.29. If we do bounce off that, then yeah, maybe it will keep kind of melting up. We have J Pound stuff next week, so a lot of catalyst. And I'm moving up here a little bit. Let's see if that first cup and handle still apply. Excuse me. Hadouken! Nice, climbing back up here. Projecting that right shoulder again. So I underclocked my, or not underclocked, but undervolted my CPU a little bit. See how it works. It went from like was it 1.9? 1.9 to like 1.85. So pretty small amount. It helps. And I ordered paste. I'll probably redo that too. Ryan might be behind all this. Yeah, my conviction on Ryan being behind it grew quite a bit after GME's earnings in that tweet. AB8 bet BBY. Yellen selling to refill. PayPal gonna raise. Yeah, I don't know what he's gonna do. Hey Trace. Urbana. 1587. Pretty specific. I mean, doing the best I can. I shorted it. Sounds like you did too. Does have a gap down there, 1571. Kroger to 55. Really? I like that. Yeah, nice little value rotation play. Maybe a little pre-earnings run up too. Be careful on a Kroger though. What their earnings will bring. Barbecue to $28. Oh, is that? I thought that's higher. Where is it at right now? It's at 46. We're at Kroger at 55?
The second half is and whether the analysts are right. Traditionally, the economists do call a downturn on earnings a lot quicker. They're less likely to call the end of it, but they are quicker to call the start of a downturn on earnings.
All right, earnings just one of the many headwinds this market faces, but seems a lot harder to be a bear at this point. Market pretty resilient. Howard Silverblatt, S&P Dow Jones, and
Is pretty
Thanks so
resilient.
much for being here. Have a great weekend.
You too. Take care.
Plenty more to come on Trading 360. In our 360 Spotlight, we'll be joined by the CEO of Net Power, who rang the opening here on
Trays,
this morning, began trading today.
Yeah, I have to go for the tin on this one.
What's next after completing its SPAC merger. Today's disruptor is Corning. George Tillis will take us.
I don't think he was
upgrade on the stock this morning and
let go for
and in our 360 round, we'll discuss the
because there was an issue. I think Ryan Cohen offered him a spot with Teddy, or in some facet with another company. Maybe not Teddy, maybe not even Bed Bath & Beyond, but something else that Ryan Cohen is working on. I can only assume it's Bed Bath & Beyond because that's all that we know that he's interested in at this point. So he did that, and now he has to put himself as acting chairman. Executive chairman is, I think he's still chairman of the board and CEO. I think that's where you get that name, executive chairman. Because we know he doesn't want to be the CEO. He doesn't want to run the company that hands-on. He said that, and I believe him. It's not. It kills you, like he said. So I think it'll be temporary, him being the CEO, and potentially Furlong will come back to GME. But at this point, I think it was more he's building an ecosystem, and he's like, this is where I need you. And I'm assuming it was beneficial to Matt because he got paid for the termination, and then whatever he's being offered, presumably by Ryan Cohen somewhere else. That's just my presumption. I wouldn't have thought that as much if RC didn't tweet not for long right after. So it's fun. Yeah, I'm on a something finally got me to look a little bit into the tin on that one. Like, yeah, that does seem a little obvious. There you go, Carvana, just let it out. Teddy's his company he started with selling like children's books. He actually bought the URL teddy.com, which is pretty significant. So Teddy Publishing, and these are his Ryan Cohen's books. It's about kind of his dad and just all the life lessons he's learned. But I think it's a lot more. I think this is just kind of the beginning of it. They've got a bunch of trademarks and patents, or not patents, but just trademarks are getting filed, and a lot of them have been passed now. Some for NFTs, a whole bunch for basically all the products that are sold at Bed Bath & Beyond, like bedding and all sorts of stuff like that. So essentially kind of another arm in the Gmerica ecosystem with what I would think would be Bye Bye Baby and or Bed Bath & Beyond. Sure thing. Yeah, it could mean that, Trays. It could be both. It could be the stock price won't be dipped for long because he knows finding the CEO is going to kill the stock price. Could be all of those. But yeah, I don't think he would have, if he didn't have Matt Furlong still doing something, working with him, and them still being, I don't know, want to say partners, but teammates. I don't think he would have tweeted that, because that would be insulting to Matt Furlong. To terminate your CEO and then say not for long.
We've seen earlier this week as the sense was the Fed was going to
so that's why I'm not thinking it's just him simply firing him.
I think is a sector that's going to benefit from that. And so therefore I pick up M&T. I think it's one of the banks that I like. There's a couple of others in that group that I like, but M&T is one of the banks I like. And so if you look at it on the chart, and I'm sure Ben is about ready to tear me apart, which I love.
I back down to VWAP. Kind of just chopping around in this range now. We can make some new lows. Didn't make new highs, so that's good. Got kind of another channel here, not quite as aggressive.
My analysis about what the Fed's going to do is going to help this stock move higher, right?
Okay, just quickly before we get to Ben.
Yeah.
Skip versus pause. Is there a difference? You said
absolutely, skip. Absolutely, because skip doesn't.
Of course, there's a difference.
Skip means
what are you doing in Nicole's chair?
Leave the door open to further hikes. If they pause, that says okay, we're stopping. Skipping is not stopping. Skipping just said we're gonna step back from this one, but next month we could potentially go higher.
Trying to build the cash position a little bit. I think we might be wanting to top.
In my mind.
All right, Ben. Kenny's ready for you to tear him apart. Take us through the chart. Does it look bullish to you?
Caroline, Kenny, obviously my reputation.
Point down 1.8. Jeez. Well, guess I'll have opportunity to average in.
What we're seeing here in terms of this rally that Kenny mentioned, and I'll show you why on the bigger picture. But first and foremost, this stock has been doing well.
Dish down 7.25.
Just the rally we've seen since the lows from last week, where we double bottomed right around that 118 level, and well, we've seen migration of value to the upside since. It's pretty well defined. Now we are looking at a 5-minute candle chart here, so I don't want to put too much into this, but I do want to point out here, as mentioned, a bit of a double bottom around 118, and then you can see migration of value to the upside. So Kenny's right. We are trending higher here over the last few days, and you can see that we're currently balancing around that area 127.
Yeah, I mean, again, it was only because of his tweet, because I don't think he would have. Just a little I know him from interviews. I don't see him as someone being cruel that would say not for long. Because that could very easily be perceived as really disrespectful to Matt Furlong, which I think it would be if there's not something he's got him working on. So that's where I'm thinking, okay, and the only thing that we know of is barbecue, so that's why I even draw to that. It could be anything though. It could be Nordstrom, could be Baba. I mean, I just don't. It could be Apple, biggest shareholder in Apple, right? But I don't think it's any of those others, because he hasn't shown interest in those like he has barbecue. Max Payne, yeah, I can buy Max. We have a link for Max Payne.
Here you can see
I haven't had that tab open for so long.
Migration of value to the downside. Bears are looking for a breakout to the downside.
Where is it?
New area to form at a lower level. I'll give it to Kenny. I mean, we're testing a key area of resistance here right now, but I'm giving the credit to the bulls here, the benefit of the doubt to the longer-term trend that's still intact.
All right, Kenny,
yeah, it's maximum-pain.com. Maximum-pain.com. So Max Payne for Ravana. He ran it. 2277.
That happened. That had that Silicon Valley Bank and FRC not happened, then I think that chart would look very different. So as a long-term investor, because remember, I'm not a day trader, right?
You are
I'm looking at
below Max Payne.
For the longer term, I'm comfortable with it. It's also a 4% dividend payer.
Upstart puts still a little bit negative. I was up 20% on just this morning, just to show you theta burn, how it works. On this candle, we're up 20% of these puts. Come up here, and now we're much lower in the price, but the puts are down 13%. That burn, that's that burn I like to sell on the farm. Sell that burn.
does provide an opportunity. And I think
No
if
way,
the
HKD
Fed
now?
narrative is what I think it's going to be, then I think there's
HKD's ripping 9%.
that we're dislocated arbitrarily.
Oh, dude,
Let's talk about your next trade. It was
that Wall Street Bets Elite DD. This morning it was top.
Still negative on the year. That's Emerson
HKD
Electric,
9%. I'm not gonna grab this one.
Right, but first of all, let's make it clear: it's not a utility, right?
Crazy.
Even though it's called
Good
Emerson
call,
Electric,
Jack.
it is
Good
not
call.
a utility company. It's a diversified industrial. I think also it plays into that story about
Good
the
thoughts,
recovery
too.
economy. If the Fed is in fact
Yeah.
successful in navigating this softer landing, right? Because I originally thought it was going to be
There goes my hero.
that I think a company
Dang,
like
man, I remember that song
Electric
so
would
long.
benefit. It's also
Na,
based
na,
on
na, na.
2.6% dividend, and it also uses
Bye, coming down. Do it. Cup and handle inverse. I'd say that's a pretty good cup and handle.
So I think it's an interesting story, and I think it has.
We're gonna have this steeper channel too. See if he gets back into there. Was it like here?
77 last week. We kind of see it bottom out there, and then this week, as money is starting to broaden out and not just go right into tech. Other than today, it's going right back into tech. You did see industrials gain. We saw the super regionals gain, which is why I picked some of these names.
Yeah, maybe I'll wait for next week for cash good puts. Whole market's gonna chill for a bit.
Look at it on the chart. We can talk.
There's always something that's going up, so fine stuff. I'll keep looking. The screener on bar chart's just kind of unlimited, kind of crappy. I don't know. Really letting it out there.
Very much supportive of what we're hearing from Kenny in terms of the fundamentals. Just looking at the last
It's like Carvana, it's a firm.
Wednesday around 77, just shy
All these
of.
ones have had huge rallies.
All the way up to 84.
Mavis.
Kenny, Caroline, you know I like to look for these areas of consolidation that form.
Mavis is an interesting one for the short too.
Higher and higher levels.
It's had a crazy rally, but it's not really looked. It's been so bullish.
Wash, rinse, repeat, and we can establish a trend here pretty well defined to the upside from 77 to 84. These are 15-minute candles.
I think Mavis is in an actual short squeeze, shorts or gamma squeeze or something.
But ultimately, as you look at the bigger picture, you're going to see a similar pattern playing out. High conviction on the left side of your screen, sideways consolidation. So we've been accepting this upper level that we've been trading in basically since 2021. As I look at what's going on here in terms of the bigger picture, I've got an area of consolidation that's forming around 88 right now, but you can see movement, right? Value higher and higher. We've got an upper extreme around 105, 110. We'll keep an eye on a lower extreme around 74, but 75. If we make our way through 88, it opens up a door for a retest of that upper extreme. We've got momentum off this retest of the lower extreme of this range here, so it's a good possibility at this point, something to keep an eye on next week. Taking a quick look at where things stand in terms of the 50, the 200-day moving average, you can see we're above the 50. The 200 coincides with that area we just mentioned, but look at RSI, very much supportive of this run-up, and if anyway, kind of leading the move here to the upside, definitely supportive of it. Let's keep an eye on 99 if we continue momentum higher here, and then ultimately
HKD 7%.
This one has legs.
Crazy, we're getting the pump, the Chinese pump right now.
I think I think the long-term trend was at 86.20, isn't it? Or do you see it at 88? Because I'm looking at 86.20. If it pierces up through there, then I think we have a move up towards 96, 98.
Yeah, again, I think that through 88, we have a opening up of some room to the upside for sure. 88's that pivot level, the range we've been in since 2021.
Right. Okay, great. Perfect.
All right, so I guess we're not going to disagree on that one. At least we still have one more that we
got one more. He can come at me.
Some chaos over, and that's Cleveland Cliffs. You're finding value there. It is down about 2%.
I come down further.
Actually, only down about 1% year to date, but you still see this as a value play.
This one's a mid.
There it is. Let it out, SPY.
So it's another sector of the economy that if the narrative that I've been talking about proves true, then money's going to move into this mid-cap.
I filmed that gap pretty fast. Whoa, he puts her up 130%.
Producer, it's a name that I like.
Bell one.
I have a target of $18 on it. Right? Where's it trading right now? I think it's trading about $14 or $15. Is that where it's trading?
It looks like it's about $15.93.
$15.90, right? So we start bounce off the $14 level. It's
No reason to sell, but
it's up.
All that volatility.
Move up. $18 would be 27.
Almost hit the
Let's look at it on the chart and let Ben take a look.
retest. That's actually a low of the day. Filling the gap already. Wow.
First of all, guys, I didn't know we were supposed to disagree on these, right? I was just coming from a complete.
At a 380. I mean, that'll take some time.
Look at the charts here.
You know,
Kenny and I don't get together.
top and HKD both pumped today.
But hey, I'm actually actually
Your other Chinese ones are pumping?
overall, Kenny, but let's just begin with the more short-term trend in
That was a
line
big
with the
flush on
charts and the
SPY.
pattern we've been looking at. Trend up here, very well defined. I went ahead and just started with mapping out these areas of
Why is Upstart holding
consolidation
up
in
so
a very
well?
systematic format.
Stop.
Every 50 cents, every 25 cents, it seemed like we found a new high here and a new area.
Yeah, I think we
of
get a
value
run up this
form, and
month.
that's exactly what the bulls are looking for.
I mean,
In the
GME's
6
already had a big
we're
run up.
gonna break out above 1635 and a new area form to form at that higher level. That sort of validates the working assumption.
Other Chinese
I'm not
pumping.
making too much out of this big red candle to the downside right now. It's just kind of
So there's a
participating in
bigger
terms of
cup.
this randomness
See
while
it?
we're in this range. As long as we hold above
Bigger cup.
1575 now. Kenny, what was it? You were talking 18, right? I'll point that level out two ways why I think it's important. First and foremost, short-term trend up.
So now we're looking for kind of a retrace handle here.
MTB in terms of when we started our discussions there, a little bit of
This was kind of a little
difference
cheater
as far
cup.
as time
Didn't
frames
fully
and trends that are playing out.
make
But
the whole cup.
18, a key
I'm
level
just
here,
with this
because
level.
if we are starting to see some momentum build to the upside, that's going to be the next big hurdle for the bulls to invalidate this longer-term 4-hour chart trend to the downside. Just taking a look at the daily time frame, you can see here it is. Kenny mapped out 18. I see that as a big pivot area.
So if we make a handle,
And,
we'll see how happy it goes. Maybe 430, 45.
So this is important up until
Starts to
there, looking for
taper.
upper extreme 23. That
And see if we
coincides with
make
the range that we formed
retest this low and then
in
flush
August,
through
May
it,
of last
which
year. So
would be the
lots to
continuation
watch
on
here,
the
but in this instance,
cup and
we're
handle.
talking short-term trend up.
Got more lines on SPY.
And again, and much like MTB,
We
kind of
will.
working our way, if we get some strength here,
Kind of had
towards
this
the
channel
upper
for a little
extreme
bit.
range. 18 is
Now
the
we're
first
back in this
level.
channel. Look how it hit perfectly on that.
But if we break through 18, my sense
Interesting.
is it's going to give it momentum to test that $23 level, which
Broke
is
out of that
actually
channel.
almost a 50% move up from where we are. So I'm in that
Then
camp.
got back in it.
All right, I guess we're going to end
And
this
still
video.
respected
As
it.
friends should note, according to Refinitiv, 7 buys, 7 holds on Cleveland Cliffs. So very much
Yeah, I think Jimmy could fill the gap. I mean, SPY is definitely looking toppy.
So a little bit higher than that.
Oh, to the
18,
upside,
a
you
little
mean?
bit lower than that
2470?
level that you're looking at.
Wait, what gap are you talking about?
Kenny Polcari, Ben Lichtenstein. Thanks so much for being here. Kenny, great
It
to have
is
you
a
in person.
The gap on GME is up to
Have a great
26.
All right, coming up next, we're going to
But no,
spotlight
I don't think it's
Clean
gonna fill that
Energy
gap.
Company Net Power. It completed its
There's a
stock
tiny
purchase
gap
trading today on
down
the
here from open, 2146. I think it could fill that.
Here live in studio next on Trading 360.
SPY's kind of just bear flagging down here. Starts down. Green B up 2.5, selling off though. Point now down 2.5. Dang, man, didn't quite get that fill. Fish down 8.75. Pretty weak. It's kind of just flagging down here on the 1 minute, kind of bear flagging. Crazy new low there on SPY, I think. Wait. Good thing Wild Bill. The stock on GME has been pretty much Wild Bill lately. Big gap up on earnings, last earnings, 2 earnings ago, up 50%. Big gap down this last earnings, down 20%. Some would call that Wild Bill. This is Jenny's cousin. So, gap almost filled there on SPY. Just broke below new low of the day.
2,300, although just barely. Now for a look at developing stories this morning, I'd like to bring in Kevin Green, senior markets
Steep moves
correspondent.
up, pretty steep
Kevin,
moves
great to
down
have you
too.
here. We're looking at Target, which is actually a loser today, down about 2% after Citi analyst turned a bit more cautious on the stock. Tell us about this downgrade. Is this a Target-specific call or a broader macro call?
This is a target-specific call. We continue to see the stock slide here, as you said, down over 2%, but we do have Citi downgrading Target to a neutral from a buy with a new price target of $130, and that's down from $177 here.
Got this little steeper downtrend the last 15 minutes.
Between
Quite the sell-off.
2022 were fairly significant, and that was actually reflected in the stock. But the 2023 sales are showing that they may have peaked so far, and they actually are looking at the last week of May. Their traffic data shows that traffic actually declined around 4%. And the first week of June, they actually saw traffic decline by 13.9%. So that is why they are a little bit cautious on the stock. They do believe that Walmart has the ability to continue to take market share, not only from the broader market, but also from Target. And they also believe that the high exposure that Target has to discretionary items will also put it in a difficult category or difficult place if we continue to have this current macro environment that we are seeing right now, where consumers are spending more on experiences as well as staple goods, which is something that Target has exposure to,
Still
but
tanking
less
here.
exposure than Walmart.
Those puts are up
Right,
250%.
I am not part of that Target traffic decrease. I seem to always be there, always spending too much money.
Gaps
Kevin Green,
filled.
senior markets
Tempted to
correspondent, thanks
take
so
them
much for
here.
joining us and for filling us in on that story.
Thing is I don't have any more day trades, so it's kind of
Clean energy. For that, let's welcome
can't
in
get back
Danny
into
Rice,
it once I
CEO
take
of
it.
Net Power. Danny, great to have you here on the floor with us.
Thanks, great to be here.
So
Good
Net
trade on this
Power
account.
just completed its SPAC merger, began trading on the New York Stock Exchange today under
Okay.
the ticker symbol NP.
Still have the futures.
Shares
I could trade
9%
those more
higher.
actively.
Should also note you were up on the podium ringing the bell. Congratulations, exciting day for you.
Very exciting. Thanks for having me.
So before we talk about the actual deal, do want to ask you why SPAC, and do any of the other SPAC deals that we've seen, which are quite a bit lower today, did that cause you any pause?
For us, no. This is actually our second SPAC. We were actually the sponsor of this one, just as we were the prior one. The prior one was probably one of the better performing public companies of the last 2 years. Kia Energy, we sold it to BP last year.
Yeah, close the rest of the SPY puts
Story
200%.
coming into our second SPAC, and really our focus this time was the same as it was.
I'll hold the futures a bit. They don't have the time decay as other ones.
That can be really
Thought maybe I should close
impactful in
them
terms of
also.
really decarbonizing power generation. So Net Power is
Yeah, I'm
unique.
closing everything.
It really is.
I'll get
I think
back
could
in.
be like a really transformative technology to both help decarbonize the grid, but
It
also
filled
at
the
same
gap.
time,
I like it.
achieve that reliable, low-cost power. That
Look for a
Talk
handle.
little bit about that process of
Inverse
converting
handle here.
natural gas into clean energy, but first just tell us what this deal
Could even
actually
take the
means
long,
for
but I'll just
your
wait.
company and growth prospects moving forward.
Yeah, I mean, first and foremost, as part of this process,
Well,
of
help
going
build
public,
formation.
we've raised around $670 million, and so that cash is really what's going to really help accelerate commercialization of.
Yeah, I saw that he gives away money for stocks.
Technology that the team has really built over the
I didn't
course
see him
of
say
the last
recently
10 years
hodl onto them.
to prove that it works, and so the company's pivoting to commercialize the technology just as we're
I
taking
don't-
the company public.
I don't
So
really
this
look to
capital is really going to help
Pulte
accelerate
for
the
financial
deployment
advice.
of these power plants. And that first plant comes off the assembly line.
Just a normal guy.
in 2026. So before the end of this decade,
No
we're gonna
proprietary
see the
information
energy
as far as I'm
transition to
concerned.
clean, reliable, low-cost
He has a lot of
power,
money.
probably decades before
Seems like a
most people
good guy,
would
nice
even
guy,
think of
but
something like this.
So all this new money is
no,
going
futures
towards
don't have time
actually
decay.
building these
It's
plants.
basically
Where
like
are
just
these plants?
shares on margin.
So Net Power owns the IP, the intellectual property to this entire cycle. So it's a new way to generate gas-fired power generation that captures all emissions.
Because you're not
So the company's business
there's not
model
different
is
strikes on
actually going to be
futures.
more of licensing. So
When you're opening or
utility
when you're going long or
comes to us
short,
and says,
it's
"I
at the
want
price it's at right
a power
there.
plant that generates
So
24/7 clean power at a really low cost." They come to us
yeah,
for a license.
that's the beauty of
we
futures,
sell
as
them
well
a
as you
license
can
to build one of
day
our
trade them all you
plants.
like.
So we're going to have a very capital-light
Um,
business model.
The commissions are higher on it though. For me, I think it's like $3 round trip
Thousands of these potential Net Power plants
per contract. So
we're actually going to put
that's
up
why
a
I want to get out of the micros and get back into the big ones. But
that comes online in 2026. But really,
yeah,
most
I
of
sometimes I'll
it's gonna
spend
go
$100,
towards
$200 on
helping our GME
missions
to start to
day.
commercialize and bring that power to the world.
And without getting too in the weeds,
And that
what
sucks
is
when you
that process
lose
of
$300 or
actually
$400.
converting nat gas into clean energy? What does that actually entail?
The double
Yeah,
suck.
so in a typical a natural gas-fired power plant, you have natural gas goes in, it combusts with the oxygen, and out comes, you know, the power, but also comes CO2. That CO2 from a regular power plant is really, really hard and expensive to try
What
to
we're waiting
capture
on is Upstart.
because of the nitrogen that actually comes in.
Upstart's holding up really well.
The air. You know, the air is 78%
course.
nitrogen, and that's actually the problem in post-combustion carbon capture. So
One
what
day
the Net
trade on the
Power
top.
folks did a decade ago, they said, if you want to eliminate
Gee, what the
emissions
heck?
from power generation, you really need to redesign
Doesn't like me
the
scaling
power
out.
generation process. And so it involves something called oxy-combustion. So the only thing going into that combustion chamber is the natural gas and pure oxygen.
I haven't done
So
3-day
that's what
trades
sets off
today.
this fantastic chain of
I should be able to buy in and fully scale out.
Okay, so when
Right,
you
shouldn't
take a
kind
look
of
at the
separate.
nat gas chart, prices have been under pressure this year after really 3 strong years. I believe it was up something like 40% last year. What's weighing on nat gas prices, and how does that impact your business?
Yeah, natural gas is a feedstock to this process. I think the thing that's really important when you take a step
All
back
right,
and you look
see
at
if we
natural
get
gas, not just domestically but
getting a
globally,
little handle on
US
this inverse
natural
cup
gas
now.
is the lowest cost form
And
of
what do you know? It's
energy
still in
that
this
we have
channel.
at our fingertips, and it's one of the cleanest.
The wick,
It's certainly
just
50%
wick below
cleaner
it,
than
filled the
coal.
gap.
And so here in the United States, we're sitting on over a century's worth of really, really low cost natural
Given
gas.
that, I mean, that is the
From our seat as a power plant
fact that it
developer,
retraced all the way back to that
the natural
support.
gas, the
I don't
lower
know. I
cost
mean, it could still be
power
bullish.
for consumers. So we like to see
On the
low-cost
longer
power.
trend, we're
I think
still
more
kind of an
importantly
uptrend.
is
So
really understanding here in the US, we have over 100 years worth of really low-cost natural gas that if you put that gas into
might be
a
smart to
power
go
plant,
long. I don't
you
know.
can fully decarbonize the United
Or
States
bounce
grid
on that
system.
support.
So what's the biggest headwind you face right now? Because we talk so
I'm more
much
bearish
about,
on it.
especially in terms of the market, in terms of the economy, all of the headwinds that we face. What is your biggest headwind at Net
Oh,
Power?
I have a
I
vertical
think,
line.
like, well, fortunately, like,
Or those
what's
might.
not a headwind is really government support. The U.S. government, the EPA, the DOE, they're so supportive of clean energy solutions. And something like Net Power that's able to deliver not just clean power, but power that's also affordable and reliable.
Why do they turn vertical?
Is really, really important. I think the biggest headwinds we face is really just the time that it takes for us to go from where we are today until that first plant comes online in 2026. Everybody's saying this technology is so transformative. We really wish we could have it next year. But technology like this, to ensure that we get it right so that we can actually scale to meet global demand at the level that we think is coming, takes time to ensure that we get this technology right, to be able to deploy it reliably to customers worldwide. But I think like the other big thing is this really is a paradigm shift for people. Because I think when most people think about decarbonization, they think of moving away from fossil fuels. But all of a sudden, we have a technology that transforms natural gas.
No, yeah, nothing like that, Batman.
Of power on Earth.
Oh, it's
And that's going to be
futures is the next step after
takes some
shares.
time for us to be able to educate people
The fact that
and make people
the
aware
whole
that
push
all
for
of a
retail is
sudden
getting into
natural gas
options and
is
going
now
along
one
on
of the cleanest
options
forms of power in the world.
is strange
So
to
that's gonna
me.
be a lot of what we
And
do
I
on
think
the
it's just
advocacy and education side is just
market
bring awareness
makers
to, we
behind
want to
it,
start thinking of moving away
because
from
they make,
natural gas.
you know, they make way more money with options, because like 90% expire worthless, whatever it is. When retail goes to options, they're always going long on them too. They're not going short. Well, I love selling options. 90% are worthless, so you want to sell that. Yeah, futures is kind of the next natural step in a way after shares, because it's like once you master trading shares, then you can trade shares on margin, but really just futures. But I mean, you're limited to futures. You're not trading specific securities. It's more commodities and indexes. But yeah, it's basically just shares on margin. Now they're selling baby items at BBBY. Do you think Ryan behind this for Teddy Holding? I don't know. I mean, so that, I guess, why would he? I still don't quite understand how it would work, because they have Bye Bye Baby. So this would be if Bye Bye Baby was being spun off and sold to a separate party, and RC was taking over Bed Bath & Beyond, and now that's why we're seeing baby stuff on Bed Bath & Beyond. I would assume, but I mean, maybe it's not, but I would assume they're not going to be, there's got to be some kind of clause that they're not going to be able to sell baby stuff in Bed Bath & Beyond. kind of a, not a conflict of interest, but it's too close to their other brand that they're selling. That's what's confusing me. Upstart's coming down. That's nice.
Margins, which contracted, like I said, 300 basis points last year, may start to improve going forward, as well as the fact that valuations
Good thing about Batman.
are compelling.
Yeah, look into it. It's
which, if you think
I mean, you have to. It's
LCD
margin,
screens,
so it's
automobiles, for instance, just for an example. I mean, there's 76 million cars
more
on average that are
risky
sold every
than
single year,
shares.
and all of them have some kind of
I'll just start small and
fabrication
paper trade it.
glass that certainly
Figure out how they work.
that Corning produce.
I did.
All right, we should think about all those things when we talk about Corning, but for a girl that grew up in Western New
Let me
York,
guess. Jenny's off. It's the weekend.
on many family road trips,
Weekend comes early.
the Corning Museum of Glass, where they blow glass, and it always seemed super cool to me as a kid. So that's what I think of.
Still looking for the top of this handle. Trying to be very patient getting into it. Getting back into a trade too soon is very common problem.
Yeah, so looking
Me
at
at
the
least.
stock over the last year, Caroline, if you consider it, it's actually been in a wide trading range.
Upstart. My Upstart puts actually went green for a little bit there.
I failed to mention this earlier, but the company also pays a pretty nice dividend, around 3.5%, and relative to earnings, it's about 50% of its earnings in terms of dividends. So technically, that bodes for a stationary-based stock, and I think that's why it's been in a trading range. Now, with that said, if you look at the daily chart using candlesticks, you'll see
right at the top of the channel here,
where there's two outcomes. Of course, the stock could continue higher from here, which is basically a gap and continuation or a gap and go, or you could see a retracement back to the the gap fill area, which is around
Might start adding here since they are. I'm just going to be doing futures now. There's not decay, so I can kind of just slowly average in. Try and get a good spot. I can wait through some chop. Doing M&Qs now though. A little weird because I'm watching SPY. Moving the same more or less.
These options, but you could sell for $1. So what this does effectively earns you about a 3% yield to the strike price. In other words, $1 relative to that $33 strike price between now and expiration. But at the same time, if it does fill this gap back to 32, that's your break even. And so that is the suggestive trade that I'm making today. Because
see,
again,
this handle could come up higher too, 430, 45.
Reversal back to that $32 area.
All right, so thanks for that trade. Another income opportunity there. George Tillis, thanks so much. Have a great weekend.
Oh, you got cut off.
Coming up next in our 360 round,
George, how could they do that to you?
GM supercharger deal and check in on NIO after the company reported earnings this morning. Trading 360. We'll be right back.
My goodness. What's my birthday? Getting a little lag there. The browser. Underclock it some more. Probably just needs new paste or something. Sorry, that's me. Oh, there's. Let's see. Okay, I got back into the short futures there. Might be a little early, but a little head and shoulders here on the 1 minute. Kind of rejecting breaking out of this channel, maybe. 68 degrees Celsius on the CPU. So still kind of high. Yeah, and that spikes up to 74 when I use the browser, 75. I'll do more paste, or new paste rather, and then maybe underclock it some more. Not underclock, undervolt. Yeah, look at that, it's staying in the channel. Let's see. He looks like it wants to come down some. Loop TV 14%. Snaps up 4.5. That's it. Groupon's down 7. Would have been a good short. And that engulfing candles right at the resistance we have drawn there. Yesterday would have been a nice short opportunity. There it is. Didn't even break out of that channel. Still in it. Yeah, the gap actually hasn't even been filled on the Qs. Let's see. Could be even building a little inverse head and shoulders here. Shoulder, shoulder, head. Cup might not be finished, or the handle might not be finished. Live DA. Copyrighted? I mean, we could show it, just can't hear it. What movie is this? The Rock? Live TA of HKD by yours truly, Ace Ventura. Oh. You got in on the BBBY hype movies? Nice. $41 likes. Thanks, guys. Coming up on noon. We had EU close about 30 minutes ago. Appreciate your likes and your support. I think Spy's building a little cup here, maybe. Maybe. Also looks like a little bear flag. Which cups handles can sometimes look. Yeah, other guys. I've seen it. The barbecue hype movie. I remember him shopping, or he's working at BBY, and it's pretty funny. It's pretty funny. Dish down 9. I'll be averaging into that one. Has a gap to fill there. Yeah, it is, because the BBY scene. Might close my shorts here. We'll see. This is a retest on that low. Tempting. Yeah, see how the Qs are lower than the SPY? It's filling the gap there. There it is. Oh, flashy, flashy. Dish down 10%. Yeah, I closed one of my upstart puts. These are just dailies, so I'm not trying to be a hero on them at all. Little profit. Hughes filled the gap. For the bushes. Oh, I finished John Wick last night. It was pretty good. Yeah, I mean, if you know what you're expecting. I did it in 2 parts though. Seemed like it maybe would be too much for just a part. Oh, there's an RSI divergence there actually. Took a long time to close that short, but I closed it. Closed at the bottom of that wick. See if you get an inverse head and shoulders now. Got a head, there's a shoulder. Tesla. And you talking about Tesla, huh?
That's probably going to save GME some investment dollars.
All right, I got out of that upstart.
They're probably going to give to Tesla. But if you look at it down
Happy
the
with that.
road, is this Tesla starting maybe that whole theme or ecosystem where they're going to have to use their battery technology too, because it's more advanced than a lot of the OEMs are using right now?
Yeah, I do think that this speaks to that, Tom, and I think it speaks to the long-term investment really when looking at Tesla, because for so long we valued this name not as a car company but as a technology company, but there was always that mismatch. The bears then would say this is a car company.
She's yellow like a daisy.
Offering its technology to these legacy players just goes to show maybe perhaps it should be valued like a tech company. I mean, it has been thus far, and it's only continuing to build here. And I also think that from a consumer standpoint, there is a little bit of a hiccup when getting an EV. You think, where on earth will I charge it? The lines right now we see in California are so ridiculous. So this is good news for us as a consumer, frankly. I think this is a win across really all metrics.
Yeah, it makes you probably rethink getting an electric car if you got to wait in line for an hour to get it charged. But Jenny,
why aren't people charging at home?
His other projects.
I don't understand.
Thing that he's trying to do, and then
like the only reason why you need to charge out is on some sort of road trip, something where you need at least like whatever over 200 miles.
Forget about everything else.
All EV owners, tell me. I mean, I can see if you had an early Tesla and it's free, like I understand that, just don't charge for free. But other than that, what is the reason to charge not at home, where it's even cheaper? There's no line, and it's just, that's to me like one of the biggest advantages of even having electric cars, that you don't have to go to the station, no gas station, an apartment. Ah, good point. Apartment dwellers. Well, that's going to change.
Now just slightly positive. I've got a chart here for you. It's
that actually sucks. I don't think I'd have an EV if I lived in an apartment.
This is
About
one of
charging?
those charts that I randomly will go to when I think a market maybe has gone down too far, gone up too far, to see what the placement.
Yeah, all the city dwellers and
so it's
apartments.
Number of companies that are above its 50-day moving average. If we have that chart, this would be a good one to look at. Even though S&P 500 is up over 11, maybe nearly 12% so far this year, we've only got about 55% of the companies that are above its 50-day moving average. Is that kind of fitting that narrative?
If this RS divergence holds,
getting led by a few big names, and maybe some other companies could possibly play catch up.
I think that it leads to.
This keeps coming down. It's not going to.
The market can go one of two ways, but with potentially some velocity.
4x on that last one, but still up on the day. Still up on that play too. That was nice.
Situation where these ones that are lagging can catch up. And I know that sounds like a pretty elementary comment, but if everything's
townhouses, yeah, that makes sense. Well, yeah, I wasn't thinking that at all.
Fall to the wayside and something else can pick it up. There's a little bit more broad strength. There's more confidence in.
Way more practical if you own a home.
You have the 493 and you have the 7
with an EV.
And 493 is a lot bigger than 7, but unfortunately those 7 in terms of their actual size neutralize that gap tremendously. And so it's not an entirely unique time, but it's certainly unique to the market of the last couple of years. We haven't seen volatility this low. It definitely leads to a situation where the melt up seems to be the base case. But the velocity of risk seems to be the downside.
Yeah, and you know what? That's one of those charts that I'll always, I won't look at it on a daily basis, but when I see extended rallies or extended slides in the market, it's telling you that overall S&P 500 is not overbought by any stretch of the imagination. So this is where that bull-bear debate comes into play, I think, a little bit, right?
I think that you can also look at too, if you're not necessarily super concerned with how something's doing relative to itself in 50-day moving averages, look at something like the S&P 500 equal weight index. So on the Thinkorswim platform, that's SPXEW, paints a lot different picture, I think, at least year to date, than the overall S&P, but really than the NASDAQ. And I think this is where that divergence is really, really clear. Is if you were to side by side look at like the NDX to the SPXEW, one's pretty flat. The other one literally looks like it's the next big thing, and in many ways that sort of seems to be the case. I mean, this artificial intelligence hype, I think, is probably a lot more hype than anything at this point. But for the first time, where the hype is centered is
just saw that scene, yeah.
Some of the biggest players in
it's hilarious. There's even like
in the case of
an ape in there or something. That movie.
Where they have longer kind of runways to continue potentially burning cash on R&D, but also it's into something that like the pretty basic.
All right, look for like a retrace up here, and then maybe a retest on one of these levels for first shoulder.
Plant alternatives, or
like we are getting that RSI divergence.
And they're only gonna consume cannabis as it becomes legal, or sports betting is.
Whoa! I'm going against that one.
You know what I mean? But these are all the things of the last few years. Or sports betting is legal in more places. So an online sports book like DraftKings must be where money should go. You go down the list. You can buy pet materials online. So Chewy, more people got pets. Like the stuff that was happening in terms of hype the last few years was, I think, in hindsight, very clearly just kind of a momentary.
I need to get
kind of
relocating here.
Balance, excitement, a fad, if you will.
Never went into RBBY.
It might be just that right now.
I've shared a lot of DD from that sub. That sub's crazy.
Amazon or Nvidia or whoever it
remember before I was like really into the DD on BBBY.
It could alter the way business is done. It could alter the way things are done on a day-to-day basis. And that can mean a lot of money for one of these companies, or all of them in some capacity. So I think it's a lot different than the previous hype,
just like
but it's still a hype.
Briefly looking in there, I'm like, dude, these guys are insane. Just how in depth they were going into their DD. I didn't understand most of it.
It used to take you 2 weeks to code something, and now these companies can start doing it in a day or a matter of hours. That increases efficiency. I think one of the things that we're going to have to see play out when the internet came on, I remember that vividly because I was in that age where, hey, we're going to lose millions of jobs because of the internet. It actually added jobs. So I think that's one of the things that people are looking forward to. What is this technology going to cause? But I got another chart here for you.
I feel like a technician today. I feel like Rick Ducat because I had some charts that I wanted to take a look at just to kind of show divergences and things differently in the market that you can look at for maybe direction or bias. So I looked at VIX versus the S&P 500. This is a 1-year, 1-day chart. You see that SPX in the green up nearly 12% so far this year. You mentioned the equal weight, Alex. That's only up 2%, so that was a good clarification there. And then against the VIX, which is at 3.5-year lows, where it settled yesterday, down in that mid-13 level. Now, you know, this is typically what we see out of the VIX versus the S&P 500.
And my CPU input voltage now 1.85.
Inversely correlated.
Oh,
right?
but it
now,
changes.
If you look at the VIX,
not fixed.
Does it tell you that there's over the last 3.5 years?
That was something I was wondering too. It defaulted to fixed, but I could do it on auto and I could do it on variable or auto or.
Make you cry out and say, okay, maybe
yeah, there were a couple options there.
A little bit ahead of itself, or
I just left it on fixed.
Reverting back to the mean, which is what we've seen out of the VIX historically.
But it looks like it's.
What I will say is this: I think when you consider
variable.
volatility, it's all about timing, right? And so for the first time in a long time,
I'm moving up a little bit here.
It's cheaper than it typically is, or relative to its historical.
I'm looking for a shoulder over here.
You know, the future of the trajectory of the markets, and you want to go to products that can help you reduce your exposure, your risk. You're not, you know, paying exorbitant amounts of money to do that. But at the same time, it's felt like it was cheap relative to itself now for the better part of several weeks, and it's only gotten cheaper. So it's not a layup by any means. I mean, this is probably one of the most, you know, methodically priced markets in all of markets. And so when you start considering that, there's a reason it's at 14, and it's because the markets aren't volatile right now, Tom.
That's true. Maybe a little summer doldrums, but to that note, we've got some potential market moving news next week, whether it's data with inflationary numbers, CPI, PPI, got some retail sales data.
I think we already got the shoulder. It's right here.
But then the big one's the Fed. It seems like the market's been lulled to sleep by the economy being better than a lot of bears might have thought it was.
Yeah, I think at least in the near term that's been the case, right? If you're going to get some sort of recession or economic downturn, you, I guess, expect to see it show up in some of the data. I think there has been signs that that's happening, but I guess maybe not to the extent that some market participants had thought it might.
It wasn't much of an echo chamber.
Inflation generally has been on a downward.
Not as many memes either. I don't know. This was a while ago.
But it's been kind of disinflation. It's been moderating, and it's.
Yeah, I mean, I guess it was an echo.
Slowly back down, sort of towards the Fed's target. It's not anywhere near that yet, but.
A hearing about. I don't know when is the next court hearing. I'm not sure.
Falling off a cliff either. That might suggest, you know, more concerning signs elsewhere in the market as well. But because of the timing of when those reports actually come out versus when the Fed actually is going to release its decision, and then of course also take the podium in Jerome Powell, it's probably not going to impact the decision next week. However, it may drastically impact the words we get after the decision's made. And so I think the volatility next week, unless there's some tremendous surprise,
yeah, look, 1939 volts.
What the Fed actually does is
1856.
On, you know, that half hour to an hour that
so it varies. I have it on fixed though. It's weird.
And taking questions. Basically, I said this the last couple days. When you have volatility sub 14, when you have markets that seem to be looking from day to day to the next event, you kind of can circle, you know, absent any major surprises, where the volatility next week may happen. And I think that's very clearly the center of the day on Wednesday when we hear from Jerome Powell.
Yeah, that's going to be something. Now, to that note here, before we go to break, I kind of want to get your take here. You don't get to 2% inflation from where the levels we are now. I know some of the inflationary data has been coming down for since last June, right? For the last year, but it's sticky as far as the services side goes. Core stuff as far as the CPI goes, kind of moderating here. You don't get to 2% from these levels.
Buys out of that.
Cause some pain. Is that
out of that downward channel?
Fed, Chair Powell can come out and say, "We're going to hike another
if it continues its climb now,
basis point
up to VWAP,
we're not going to pull back
maybe higher
until we see that trajectory speed up. Because if you don't cut and that inflation stays sticky, then you've got the mistake made."
Well, it's unclear to me how strongly correlated the interest rates actually are to goods inflation, to be fair. So I'm not sure 25 basis points does anything.
I know.
mean, it's more the signaling that the Fed's doing anyways. So, yeah, I mean, continuing to signal that inflation is an issue, that they're worried about it, and that they're going to continue fighting it is really all they can do. So whether or not they move it from 5% to 5.25% or 5% to 5.5% or ultimately get to 6%, like, it's unclear. I mean, if a business can sell their goods for a higher price, they're going to continue to do that, especially given all the kind of pain that so many different parts of this market, from landlords to consumer-facing good sellers, merchandisers, like through the pandemic,
green.
the bullwhip effect is really what's caused this more than anything, and we're going to be on the backside of that, and we've seen that in many
West
of those
down
markets.
5.
I mean, semiconductors pre-AI. We're kind of in a bit of a gully, and that was impacting pricing. So that's how inflation gets fixed. Inflation gets fixed by demand and supply getting back into line, not necessarily interest rates.
Yep. Big week next week. It's amazing to me that the VIX is slow going into next week, but we're going to have to wait and see. Let's take a quick break. When we come back, we're going to take a look at one of the underperformers in the S&P 500, and that's Starbucks. The stock is flat this year. But down about 15% over the last 5 weeks post-earnings. Fast Markets coming right back.
Let's walk through charts, one of the most commonly used features on Thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing. For symbol comparisons, select
Yeah, buyer's chart looks really nice. Nice break out of that bull flag. Call macaron. Clients received. That just happened. Looks like it. And you're on that. Because they just reverse split. They reverse split a while ago. What was this compliance for? Anything else? Good earnings. This chart looks really nice. Good volume. Price targets. Yeah, 69 million. I come down a little bit here. Maybe this is the longer 5-minute shoulder. It's bouncing off that, kind of break out of that channel. I'm literally watching SPY to trade NASDAQ futures. Maybe not the best. MBIS, it's actually down today, 8.7. Taking a breather.
It's certainly happening, but maybe not as robustly as speculated. But within the data, you mentioned China same-store sales did rise 3% and transactions increased 4%. But what stuck out to me was the average ticket price fell by 1%. So we know that Starbucks isn't cutting prices, at least they definitely aren't here. So that means that the consumer is cutting out maybe that extra thing that they were buying, or they're just buying for themselves now, or maybe before you were grabbing
Because it looks like a larger bear flag.
Sandwich alongside it, which was so much of Starbucks' focus for their growth was, we kind of know you're going to come for the coffee or the tea or whatever you come in the morning for to get beverage-wise, but we want to sell you the breakfast item as well. That's where the margins are. That's how we're going to expand our growth. That's how we're going to, continue to monetize you as a consumer. And that's not happening in China. It's going the other way.
Yeah, and they've seen a decrease, according to some metrics, over the last several weeks, that it's actually been going down. But you got an example trade for us here. Implied volatility is still relatively low compared to the last 52 weeks. The thing I want to know is this, it's listed under consumer discretionary in the S&P 500, but a lot of people consider it a consumer staple, myself included. But how do you want to look at this from an example trade perspective?
I absolutely think it blurs those lines.
Yeah.
I think it probably
Barbecue kind of melted up to VWAP there.
Too many of us probably consider it a consumer staple. That it certainly, like I said, is in that gray area. But it seems to be, you were on your kind of technical bent in the first part of the show. I'll kind of piggyback on that. It seems to be at a pretty critical area here from a chart perspective. It's sold off tremendously since that earnings event. Almost jaw-dropping how much it's fallen kind of quietly in the
GME
background.
dropped there.
This is indicative of what we talked about on the broader
2188, up
from
2%
a trading
now.
standpoint, though, volatility at the 0 percentile. So we have a situation again where you're going to see this in a lot of names, even when they're selling off, because the broader market implied volatility has basically just been sucked out.
Yeah. And
that changes how you approach strategies. I looked at it on a 5-year implied volatility percentile. Obviously, you're going to capture a lot of really volatile times. It's 3 on that. So even
inverse edge shoulders might be failing there.
Still pre-pandemic times, it's still pretty low. And so I looked at a strategy that is one that you would typically deploy if you have a directional bias and are looking at something in a low volatility environment. Buying a call debit spread in which I bought one, or for this illustration, looked at buying one strike that is in the money and then selling one that is out of the money here, buying the 97, selling the 100. You're looking for somewhere around 150. So if you can get better than that, that'd be obviously ideal, because it changes your risk reward then, lowers your break even. But really with these type of strategies, my kind of loose guideline is looking for about half the width of the strikes. And the reason being is it's directional. The stock's going to go higher, it's going to go lower. I'm potentially deploying this strategy in alignment with whatever outlook I may have. In this case, I'm looking at a bullish outlook as more of a contrarian bounce off this support kind of a stance. But if you're going to be directional, you kind of know it's sort of a 50-50 proposition. Equal risk, equal reward then. And obviously a little bit less than that in terms of $1.50, get down to $1.40 as we looked at here. That's even better. It means it's a better than 50-50 risk reward. In this case, you're risking 140 to make 160 with the break even at 98.40. So the break even is a little bit above our current share price. Right. You would need a little bit of a rally, but you're talking 60 cents on a nearly $100 stock. That's less than 1%. And so that, I think, is sort of, in some ways, the cost of doing business with this. It's risk defined.
Interesting macro.
Super long-term trade, only goes out to June 23rd. So
yeah, SPY's come down more.
Well, but looking for a rally to just 100. You're not asking it to get back to where it was pre-earnings. Right. You're not asking for much at all. Even if you get a little bit more like we got on Wednesday, where you had some of the cyclical stuff.
Actually have some liquidity in the options chain.
Like that again, maybe Starbucks takes the reins, and some of these discretionary items, these consumer staples, consumer-facing stocks that have been laggards, quite frankly, for the last few weeks, take leadership, and maybe you get a pullback in the tech names, or maybe they just join the tech names as seemingly they just find new heights every day.
Right. You mentioned that key 200-day moving average, which is sitting right on acting like an area of support. So this strategy takes advantage of a move higher, buying one of the 97 calls in the June 23rd weekly series, selling the 100, $3 wide, bullish call vertical, paying $1.40 debit for it. There's your risk, 140 bucks. You want it to go back above 100. That's only a couple percent above the current share price. So a good
Up on 12:30. Thank you guys for your support. We're at 44 likes on the day. Buy's gone from green to, actually did hit red. Green to red. Zero close in a day. RPU's up 1.7%. Getting close to GME now. GME's up 1.9. So they're meeting.
Rallied 56% yesterday after the company announced an improved Q2 outlook. Stick around. Fast Market's coming right back.
There. Quick to close my longs. Customers are being asked to tip at self-checkout. Manufacturing now accounts for about 13% of all non-government construction, the highest share on record in a data series stretching back to the early 1990s. Trying to meet financial goals, over 80% of American Gen Z started investing before the age of 25. U.S. Pentagon announces new $2 billion Ukraine air defense package. What about you moving to Ukraine? U.S. government to impose penalties on 43 drugs over price hikes. Market is having its best performance on Fridays of any year since 1953, as of last week. The S&P has averaged a gain of 0.42% on Fridays this year. That's a crazy high average. Almost 0.5% average. The upside every Friday. Seemingly an easy trade. And we might still have it today. Could still get that bounce back up to the highs. Kind of chopping around here at the highs from earlier this week and last week. Have some divergences here. I'm gonna be careful not to try and trade this chop too much.
is a very premier brand, a very trusted brand, not just domestically but globally. I mean, if you look at the stock year to date, it's up over 42%. And there were some concerns going
Too fast,
into
market audio.
the announcement of the password sharing crackdown, which has been
For you
announced
guys from
months in advance.
ad audio.
Based on some of the
So typical midday chop on the market.
activity for Netflix since 2019.
See if something sets up for
subscribers. So, you know,
afternoon.
I would say maybe some of the passive viewers are going to not continue to subscribe or actually add subscriptions, but the more active viewers seem to be less apprehensive to cancel right now. And so I think this is a good sign for Netflix, as we know has performed quite well since it bottomed out last year at around $170. Now, considering what's going on with the numbers, you just have to think about the scale the company has, plus the prospects of what it has growth-wise going forward. And about 100 million households utilize their services, and about 232 million unique subscribers. While at the same time, the challenge in the last year is cutting back capex, freeing up operating cash, which the company has. And in fact, one of the things about the business is, if you think about the offerings now, they're offering, of course, an ad subscriber or ad-based subscription, which again is a lower price tier. They have their traditional full service or full subscriber base. But at the same time, you also have to think about the content. They have a unique content ecosystem, which again is very popular for viewers. So from a digital business standpoint, you know, an incremental or marginal increase in sales can actually increase your EBITDA quite aggressively, because if new subscribers growth is going to happen because of the password sharing crackdown, it's very cheap to add subscribers. And in fact, you could say it doesn't cost them really anything, but it does add to revenue. So it's really just a trickle down to EBITDA, which for the business, if you look at it on a trailing basis, was negative about 11%. It's positive by 9%. And some would say that this new password sharing crackdown could get EBITDA back in the mid-teens. And if that's the case, maybe the 35 times forward earnings is still considered cheap when you look at it relative to its 5-year average around 65 multiple.
Yeah, and George, when you look at that, you know, it doesn't seem like anybody wants to leave Netflix. It seems like a lot of people have been surprised by this move higher, but they're cutting costs too. That margin improvement with more people signing up that were using the product anyway, it just seems like there might not be any stopping this company at this point.
Well, that's the thing, you know, because it's a digital-based business, any incremental sales really go down to the bottom line. While at the same time, they're doing what shareholders really asked of them, especially when you look at the first half of last year where the stock just tanked on 2 consecutive quarters down to that 170 area. They're cutting expenses. So both of these are catalysts for the stock. If you look at Pivotal Research, they actually upgraded the price target. They maintain a buy rating to 535 from 425. Based upon expanding EBITDA growth and, of course, net new subscribers. I mean, you just have to think about the global ads. 44% of their sales come from Canada and the United States. There's a possibility of expansion tremendously internationally on an international front. And lastly, I'll say this: just looking at from a technical standpoint, using weekly charts, there's a lot of airspace up to about the 470 area, and it's got a lot of momentum going for it right now.
All right, George, great breakdown here of Netflix, one of the best movers here in markets for the year. Appreciate that. That's George Tillis, Senior Markets Correspondent here on the network, breaking down the Netflix news. We did get Pivotal Research, as George mentioned, big price target hike, high on the street on this one. So I wanted to look at a strategy that takes advantage of that. If you think it's going to go higher, where you know you can define your risk going into a position. And like we looked at in Carvana, we had a put butterfly to the downside. In Netflix, we're going to look at the same type of strategy, but we're going to use a call butterfly to the upside. We're going to keep it unbalanced, so we've got no loss to the upside on this one also. So we're going to go out to that same July monthly cycle here, and we're going to buy basically an at-the-money call, the 415. We're going to buy that one time. And then we're going to sell 2 of the 435 strike call. That's $20 above that 415 strike that you bought. And then to wrap it all up, you're going to buy 1 of the 440 strike calls. So you're buying a $20 wide call
BBBYQ is up
vertical, selling a
13%.
$5 wide call vertical in this
Doing
strategy.
well, another
To
new high on it with some volume.
This trade, you're paying roughly, we've got about a $7 debit listed up there. That would be your risk, $700 per spread. It's trading more closely to about $750, $775 right now. But just for this example, we're going to use a $7 price. You break even on this one. If you pay $7, it's going to be at that 422 level to the upside. That's not too far above the current share price. The risk is what you pay on this, so $700 per spread. You see there on the risk profile, we've got the apex of profitability right at or near that 435 strike. But even if it goes above the 440 strike, the upside part of this call butterfly, you're still going to be a double on this type of position. So that's why you use an unbalanced one as opposed to an equidistant one where you'd have a break even to the downside and a break even to the upside on this one. Now that 422 level on the break even is basically right at where the stock is trading. As the stocks continue to move higher, that's
Yeah, I was seeing that on BBBYQ. It looks nice.
Increased also. But a good look at a bullish stance here in Netflix. You've got 42 days in that one, so you've got some duration also. And that's going to do it for me on Fast Market. Thanks to Alex Coffey for joining me earlier. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming right up.
The news on Beyond Meat yesterday. They put to the test. Taco Bell is testing consumer reaction to vegan crunch wrap. Is that what it is? Lab-grown meat maker Uncommon raises $30 million from OpenAI's Sam Altman and others. No news on that rip yesterday? Whoa. Might want to get some calls on this. And some cash carried puts. Chart looks nice. FE is not too crazy either. I don't know what that line's. Really weird, actually. The article lists both Carvana and Beyond. Why are they moving? What's interesting is they both moved yesterday. But Carvana had a catalyst, I think. Their earnings? It's Carvana's news. Unusual call options. Oh, guidance? Boost their guidance? If they're in some kind of basket, because Beyond didn't have any news that I see. Oh, he's kind of coming up out of this range a little bit. MACD flip bullish. Get green over the 9. And
autos and specifically Tesla.
Yeah, today could have been on the macro front a little bit of a runaway to the upside, and then we saw a little bit of a wobbly price action at one point during fast market when I was with Tom. We had S&Ps in the red, so I think today's become a little bit more interesting, but in the end, it's kind of just back to where it seems like all days are, which is unchanged. And so we'll see where things shape up. The last
pretty melancholy today. Back to where it seems all things are unchanged.
2 in the red, nothing's moving over 1%. The S&Ps are basically at the unchanged line, as is the Dow. So we'll see. I'm excited for the last few hours, but not necessarily expecting much.
Right, and it does feel very much like a Friday summer trading session where things are just sort of getting quieter as the day progresses. But as always on this show, we'll kick things off here with our upvote and downvote segment. Following that, we'll chart and trade those upvotes. We will look at Carvana, which was actually initially higher on the session, now lower after a massive move to the upside yesterday. Then we'll look at Airbnb potentially facing some tax headwinds overseas in France specifically. Last but not least, our under 30 name today is Warner Brothers Discovery, pacing to gain about 16% now week to date.
Yeah, that stock has been quite a mover in 2023. I believe it was the strongest performer in the S&P 500 in the month of January, and really since then has continued to make headlines on just how volatile it has been, given its sort of long-standing in the media space. Carvana, wow, another big move, but unfortunately going the wrong direction for Carvana bulls today. We'll talk about that during FOMO, see if it's potentially the end of what was maybe a short squeeze, or maybe just a slight step back here on something that could be longer lasting.
Or if Carvana and Beyond are in a basket.
We'll cover. But let's do upvote, downvote, not endorsements, not recommendations. You sort of hinted at this, Jenny, a little bit more of an autos theme here. Real big mix from GM to Tesla to NIO to Ford. There's a lot in common between these names. There's also a lot of very, very key distinctions between all of them. We'll do it a little bit differently, though, today. Let's go through all of them, and then at the end we'll decide what we decide to go forward with for upvotes. But let's kick it off here with GM, as some of these stories are sort of intertwined as well.
Totally. So GM is announcing this collaboration with Tesla to now integrate the North American Charging Standard connector design into its EVs beginning in year 2025. Additionally, the collaboration will expand to charging access for GM EV drivers at 12,000 Tesla superchargers and growing throughout North America. This agreement does coincide with GM's ongoing investments really into its charging infrastructure, with more than 134,000 chargers available to its GM EV drivers and growing again as part of this broader initiative. Now, we actually first got wind of this last night on a Twitter Spaces event with CEO of GM, Barry Barra.
Carvana was from earnings, yeah.
CEO, of course, Elon Musk. And Barra did really highlight
has a push from earnings. Interesting though, it's Beyond. I don't see any catalyst for Beyond.
Tesla models. She said we have a real opportunity here to really even the playing field and be the unified standard now for North America. This
it ripped the same day as Carvana.
Actually partnering also with Tesla. But Musk did say that these GM owners would get equal access to superchargers, again saying this would then create this really strong opportunity, and he thinks that people should be comfortable buying either a Tesla or a GM, and they will be providing support equally for both of those vehicles. I think just going to show that Tesla is truly now
He's climbing up a little bit.
Not only are they obviously a very strong automaker, but they also are serving technology to even some of these legacy names like a Ford or GM.
Yeah, to me this is almost more of a Tesla story than it is a GM story. I think it's important for the companies like GM and Ford to be included and have access to this infrastructure and make sure that they're creating things that are going to have access to this infrastructure. But to me, this tells me two things about Tesla. One, they're not going to have to reinvent this and figure this out and readjust all the existing infrastructure. Seems like the industry is going to adapt to them. At the same time, you talked about how this will sort of knock down barriers, though, if there were separate kind of access. So think of it like the iPhone versus every other device being a different charger. If you were going somewhere that maybe had a public access for a phone charger, maybe they only have the iPhone. That's going to increase the likelihood you want to be in that ecosystem. That's the most common thing you're going to encounter. The same may happen for Tesla. If that was where the superchargers were, doesn't really make a lot of sense to have another electric vehicle if I can't charge it somewhere. However, I think it speaks to how confident Tesla is in their product that they're like, yeah, use our stuff. We'll help you. Knowing that, hey, we feel that confident about our product. We're the industry leader. People are going to buy our cars because they like them, not because of whatever reason. You know, it's the best choice for, you know, charging purposes. But next one here on the list is Tesla. And so as we kind of tie in a more industry story, let's hone in on just Tesla itself, because of the bunch, this is the mover today, and it's been the mover for years. It's been the movers for weeks. It's been the mover, seems like always, whenever you're talking about electric vehicles. But it's up 5% today, and it got some company-specific news as well.
Yeah, and I would definitely actually say this is, I completely agree, more of a Tesla story. And Tesla might even be the story, at least so far on the year, with shares now up almost 100% year to date, and up now 14% even just this week alone. Still down off its 52-week high by about 22%, but now up 140% off of its low. So the reactions to this news were super positive. Naturally, Ross Gerber, who is a notorious Tesla bull, said this is checkmate. This is setting a standard with the biggest and still the most plentiful makers of EVs other than even Tesla. Wedbush's Dan Ives also reiterated his outperform rating, while also raising his price target from $215 to now a street high of $300 a share. He said as the sum of the parts story for Tesla now further comes into play with its supercharging network, as well as its energy business, AI-driven autonomous path, and unmatched battery ecosystem. And I was actually reading an older estimate from a Goldman Sachs analyst that expects some of this expanded charger access could bring about $1 to $3 billion in annual sales to Tesla. So that is a massive opportunity. And I think you made a really good point, Alex, in terms of this widespread adoption of EVs. I think this is sort of the next shoe to drop, because the issue is still the fact that their
There's Spy. Should have held my lungs back here. Oh well.
Surging demand you see in California,
Midday chop.
some of the more West
Gotta
Coast
get you.
states, that there are lines, I mean, up and down the boulevard to have people access some of these EVs or EV chargers.
Check my stops.
This, I think, is a positive piece of development for not
Kept
only
flushing.
Tesla, GM, but also us as consumers.
You know, the thing that sticks out to me, though, is when we talk about this analyst note in particular from Wedbush, and nothing against Dan Ives, friend of the programs here on our network, and a really, really smart guy, obviously has his opinions, tends to be on the optimistic side. But what bothers me about kind of the
Tends to be on the optimistic side.
is we just, as you said, watched this stock basically rally 100%.
Beyond Meat, actually.
Near where it was in terms of all-time highs.
As much as I don't
But why wasn't this a best idea before the rally? And
necessarily believe in it fundamentally.
Best ideas after the rally happens, and to me that always just doesn't sit well, because that's not what we're told to do as investors. We're told to buy
like the volume and the push yesterday with
said things like you can
potentially with the Carvana squeeze. I'm not sure.
From there, or you sell higher.
But yeah, little double bottom here.
But to me, this
pulling back.
always seems a little bit kind of like
fundamentally it's still overvalued probably, so
the whole time for the most part, but
be careful with it. It looks like they might be turning it around.
Off its lows, just it doesn't sit well with me. But next one is NIO, and this is The stock doesn't necessarily say it, but in terms of price today. But
Oh, Dish also. Like Dish, it's coming down to a double bottom.
No kidding. I
Or
mean, a
triple
completely
bottom.
different mover when looking at NEO, and this stock has been
NEO also is kind of interesting what they're talking about right now. As this RSI divergence, 3 of them. So now that earnings is out of the way, earnings actually didn't do very well, but stock kind of rallied.
In their fiscal first quarter, but overall results were frankly just okay. They reported an adjusted per share loss of 36 cents from sales of about 1.6 billion, which marked growth in sales but a decline on a year-over-year basis in their earnings. Their overall gross profit margins came in around 1.5% for the first quarter. This was down from the near 4% they reported last quarter and down from over 14.5% reported a year ago. So that's concerning. The numbers weren't really too different than what the analysts had been expecting, however.
There you go. Estimates were negative 0.32, actuals negative 0.36.
The CFO did say they will
revenue was 155, expected was 163.
Improving their operating efficiency.
Just EPS last quarter negative 152. Estimates were negative 0.29.
This is up from the 6,100 vehicles it delivered back in May. So June will then put its second quarter deliveries at roughly 23 to 25,000.
You know, I like Dish too, like a little bit lower. It's probably going to fill this gap. Then if it holds out, it's at a nice level. Not a very fast mover, but I think fundamentally this is probably the best out of those. But beyond NEO and Dish.
To produce about 33,000 units per quarter. So while these results, I'd say, haven't necessarily seen the selling they initially had post the financials, there's still, I would say, not a lot of excitement around NEO shares. Still down about 20% on the year, but more than that, down almost 60% over the last 12 months.
Yeah, this seems to be a situation where maybe some of the messaging is the right messaging, and the question for NEO, I think, is it just already priced in? Is this stock gone too far? But the concern
7 divi on T, is it really that low?
Are people who are involved in this one going to just
$15?
Because
yeah, wow.
So many of its peers continue to kind of work their way back.
I sold my TI Verizon in the long term.
95 cents off its all-time low, Jenny, and so you're looking at this one. It doesn't
Pretty
inspire
good.
confidence, and I know Tesla's chart, if you go back far enough, doesn't look that impressive in terms of the rally compared to where its all-time high was. But over time, it's gone higher, and this has been a name that's largely, from its onset, worked its way
at a pretty nice price
to the downside. And so, again, we'll see if investors lose their patience or not. But next one on the list, though, is Ford, and this is another one where, wow, it'll really test your patience because this stock was like $10 forever. It had a little bit of fun, though, in 2021, I believe it was, as it ventured up towards 25 a share. But didn't stay very long as 2022 brought us back to a more, I guess, common reality for Ford, which is hanging somewhere between 10 and 15 bucks.
Yeah, and Ford has had some pretty, I would say, negative headlines weigh on it this year. They've had a lot of recalls. They've had some production missteps. And so I think all things considered, when comparing all of these names, Ford is actually the second best performer on a year-to-date basis. They are up about 19% and up about 4% over the last 12 months, which I think, if you followed Ford, speaks to some of the strength we've really just seen over the last month even. I mean, Ford is expected to gain now over 11% week to date, so having a really, really strong week. And they did announce a production shift actually yesterday. They're increasing the number of their all-electric F-150 Lightning pickup truck XLT model that will come off their assembly line in Dearborn, Michigan. They said that customer interest for XLT has considerably outstripped supply, so really promising. They're now on track to increase the Lightning production to a run rate of around 150,000 Lightnings by year end. That's 12,000 a month, and indicates sales of around 60 to 70,000 Lightnings this year. So those are really strong metrics, and of course adding to the strength we're seeing this week. But of course, I think also getting a lift today on the fact that we are seeing increased partnerships with Tesla. Everything here to me seems linked, Alex.
Yeah, as I look at Ford, I just can't help but look back to 2010 as this stock kind of hung out between $10 and $14.
Just made my first Theta Farm membership post.
And, I guess you get the picture. Just go through time. The anomaly was 20.
Telecom is not exciting.
This stock into perpetuity has seemingly been a $10 to $15 stock, and until they do something meaningfully different, it's hard to see why that can't continue. But let's narrow this down here, Jenny. So we got GM, we got Tesla, we got NEO, and we got Ford. Well, we just had earnings from NEO. It's a fairly fairly low price stock, not a ton going on. I think we can take that one off our list. Ford, I mean, there's never anything seemingly going on in Ford. Nothing against it. Sometimes that can be good. And I think
Oh, I didn't even notice. Where were you guys? Look at Apron.
Partnership as GM is now kind of
Where
announced with it.
were
So
you?
let's continue on for our upvotes with GM and
Getting
Tesla.
a reverse
Tesla
split
being
squeeze.
Sort of the face of this industry, and GM trying to, you know, buddy up with the key industry leader and become a real leader.
I was looking at cash good puts on this. I'm like, dude, that chart looks awful.
Not always had the most fond things to say about Elon Musk, so I like this partnership. Perhaps they are building that bridge between the two. So we'll be diving into GM and Tesla and
Wonder if this will have legs and keep going.
example trades. Stick around. Next Gen Investing. We'll be right back.
Apron's up 46%. Apron doesn't have options? What? They get rid of them? Thing used to have options, I'm certain. Apron might be a good play. Gotta be quick to take profits on it though. DNA is up 5%. You guys still in this? That looks nice. Epstein accuser seeks new testimony from JP Morgan. De-dollarization is evident in foreign exchange reserves, where USD share has declined to a record as a share in exports declined, but is still emerging in commodities. Jamie Dimon said. US Pentagon has announced a new $2 billion air defense package for Ukraine. After a 24% S&P 500 rally off the October lows, US equity investors are finally getting bullish again. Just when we're about to turn around. AAII sentiment poll. Bulls exceed bears by 20%. Most since November 2021. That's how you know. The top. NAAIM active manager exposure. 90% net long. Highest since November 2021. Here's November 2021. Quite close to the top. Blinken expects to be in Beijing on June 18th for meetings. Bank of America says the bear market is over. Oh man. Might get a little more pump next week. The way the SPY's kind of holding above this breakout. See what end of day brings, but all next week is definitely going to be a catalyst for some volatility.
Trending upward. Our long-term moving averages is kind of sideways now, suggesting that we're
that one candle on SPY that just flushes down.
Either way, but in the shorter
You
term,
lose your long.
we are starting to move up.
I don't want to just
So look for
chase a
those
slow
moving
melt in the middle of the day.
downward once again. The slope of the yellow 21-day and orange 63-day to switch from up to down. That would be a sign that the trend is starting to worsen and perhaps switch to the downside here. And you know, as I mentioned, those areas to watch for support and resistance, 38 to the upside, around 37 to the downside. Pretty clear cut, I would say.
Yeah, and Rick, I have to say that the case for GM, it appears, is still somewhat trendless, even despite this move higher today. It's only about 1.5%, and you'd think that with all the optimism, at least across social media and sort of the headlines, that this name would be getting more of a lift, but perhaps
GME melted
exactly
back up to
Alex said,
VWAP.
just
It's up
more of a
4%.
story. But now when trading this name, Alex, I think considering the fact that Rick pointed out there's not really any clear signs of bullish momentum in this name as of late, walk us through then a more bearish leaning example trade.
Yeah, you look at this, and is this more capitulation from GM as opposed to a real, excitement from the company? Do you think they wanted to go reach out to Elon Musk and Tesla and make this partnership? I'm not sure. Maybe it was more from a place of necessity. And say you're maybe less optimistic on GM and looking to express a more bearish outlook on this stock, maybe you would look to something like buying a put calendar. Reason being, implied volatility levels in GM are on the lower end of the range, the 5 IV percentile. That basically suggests that implied volatility relative to itself is quite low. And in low volatility environments, oftentimes traders will look to strategies like time spreads that can benefit from increases in implied volatility, of which this put calendar would fall into that camp. So looking at buying a 33 put calendar, selling July, buying August for a 40-cent debit. One of the nice things about this trade is just is how small it is on a notional relative basis here. Only 40 bucks in risk on this one. Risk profile pretty straightforward. Looks almost like a mountain. Peaks out at the strike. Highly customizable. So this is the or one way to look at it from a bearish standpoint, both in time frame and time horizon, but also strike selection. Someone with a different opinion may go to a different strike, or quite honestly, maybe a different expiration, or possibly even a different symbol altogether, not even looking at GM. So the strategy is sort of ubiquitous, and this is one that you would use in a low volatility environment, typically looking for an expansion in implied volatility, as well as a movement towards your strike. So you can see clearly the best case scenario was a move towards 33. That would be about a 10% drop in the stock. So while 36 to 33, Jenny, maybe in our minds doesn't seem like a big move, percentage-wise, it's quite the big move.
And now to shift gears here and look at a name that is definitely making a big move, and that is Tesla, of course, with shares up 5% now on the session and hanging on for dear life here. But a name now that has been up for 11 consecutive sessions. And Rick, we know from how frequently we discuss Tesla that this name can give it and it can take it. But it does feel right now like the reactions, at least among analysts, are just sort of fairly late to the game, like Alex said. But it's hard to ignore this chart that has just been straight up over the last 2 weeks.
Yeah, I think we're more in the giveth column here so
You
far.
pick up a lot,
Had quite
Ace?
a strong move upward since our last
Yeah, I mean, it's had a nice
And
bounce.
initially, the move was downward. We gapped down. We hit some lows right around here, near about the 160, 155 area or so. But then we're up about 60% from that point. And even more so from those yearly lows near 101. We're up about 142% from there. So really quite a name that's known for its volatility. It's certainly not
Yeah, now it's at
disappointing
28%.
And we can see here that
the
gap
yield
down
on
is taking
IAP.
us right to the edge of the value area here. That's these two thick yellow lines on
It's just continued to grind. It kind of broke out and just
70% of the trading has taken place. You can see there's some very clear nodes.
not letting go.
See that
I want some red days to get some more cash secured puts.
like 190 or so. That's
Oh, apron, is it going again?
That's our point of control.
Move back up to VWAP.
Convincingly beyond that point, the next one is around here, near about 310. So that would be another more high conviction area. We've got a low conviction area here in between. So beware of fast moving prices from those from these areas to happen. So looking at momentum as well, our RSI quite high here, really above the 86 mark here. And remember, RSI only goes from 0 to 100. So a reading of 86 is really quite strong, suggesting momentum is very.
You should learn to do covered calls now. Get even more dividend.
Traders here. So look for signs of slowdown in momentum here.
15K, so how many shares is that?
Consolidation or even a shift back downward here. Look for price to perhaps make new highs while RSI does not make new highs. It would be a little bit of bearish divergence if that were to happen there. So the area to the upside that looked interesting here, 255, this red dashed line, that was about where price topped out a couple times back here, and that was also where we opened up after a gap downward right there here. So that could be a support, resistance point. If we continue heading upward on our path toward that 300 area, to the downside, 229, that was about where we topped out here previously. That could be another point to watch going forward. Our trend line is
Swimming pool weather.
This quite steep trend line heading upward. That would be an area to watch as well to see if this trend line holds on the next move downward.
Say that things look pretty
How many shares do you have, Ace, of IEP?
So backing some of the positive headlines we've gotten as of late, and this name we always say
700?
is so polarizing, but the Bears, it's like they're hiding somewhere in the night at this point, because where have they
So
gone?
look,
They're very
June.
quiet across social media. There's not a lot to be said from those that are sort of the perma bears of Tesla shares. But we will leave it there. Appreciate all the insight, Rick Ducat, our chart master. So Alex, when looking at trading this name, I definitely think right now there is almost a FOMO type feeling when looking at Tesla.
You saw the June 30 strike. Gives you upside of $2 more.
So walk us through then a more neutral to bullish leaning strategy, just considering the fact that we've been up for 11 sessions.
Yeah, one other thing people might be seeking to find is volatility in this market, and Tesla has delivered that. And not only from just a sheer movement standpoint, from an implied volatility standpoint, this name is in the 33rd IV percentile. So it's still, I guess,
You make $500 in premium. Well, that's just a week that I didn't even realize. Make $500 in premium by next Friday. You're just agreeing to sell your shares at $30. Wait, what did we say?
The stock market. And so looking at a strategy that is selling volatility but also neutral to bullish as you laid out.
Actually be higher than that.
The story seems to be much more of a Tesla story than anything else from my eyes. Looked at selling a put vertical below the market, 225, 220.
You're 76.
Put vertical in July, selling the one.
Yeah, $532 by next Friday.
Would mean a break even of 223.
If it is at $30, you can always roll it or sell it at $30 and make the whole thing profitable trade. But if it starts to slow down or come down, then you're making money with it slowing down or coming down.
Using sort of that 30 cents on a dollar of risk for the credit. Or you could kind of find a point on the
You make
chart
money or you make money.
that you find to be more interesting, be that bearish or bullish. And
I mean, you lose money if the shares come down, but not on that play. Calls will only be good for you.
Here, on this one, 223.5 break even.
But at least when it comes down, you'll be making money on that.
On $350 and maximum possible loss. That takes place if the stock falls below 220, stays there through expiration. These options offset.
Oh, you move that into your long term.
Max profit is captured.
Have your brother sell cover calls on it and skim off of you? Buyer keep going. Yeah, buyer looks nice. Oh, I thought about getting into some of this. Mentioned earlier, it looked nice, but I've made actually a lot of trades today.
Into expiration can add risk, like unanticipated exercise or assignment. Now coming up next, it's time for FOMO. We are looking at Carvana and the week.
It's a good opportunity for you to learn covered calls. A nice steady stock.
12.5%. We'll dive into that price activity coming up next.
I'm moving up a bit. Kind of have a shoulder head if you see it there. That's a bit of a larger one. Not sure I want to take it or not. Not there. Oh, Q's are already back to VWAP. It probably does. Well, that's nice, Ace, that you love him. It is pool weather. You kind of changed my life with Ionizer. Shout out. Rumble's up 4%. A lot of chop on that one. I did take the long on the MNQs. Maybe the SPY would have been better, I don't know. Been enjoying the Qs though. Apron hanging around VWAP. Bior. Profit taking going on. Bit of consolidation. 670 it hit. Got one. Yeah, my pull, it's like perfect for my pull, just one. I leave it in all the time. I ordered some more though to sell. I'm gonna sling these things. They're like not known about. And people even do know about them, they're probably skeptics like I was. It's so legit. You might not even realize how legit it is because you've never had to chlorinate your pool. You just fill it up and then dump it. Oh, you did. You finally got a pump. Good. Wait, I thought you had a pump. If you were ever like chlorinating your pool like normal, you would have realized how big of a deal the ionizers are. Yeah, we do have Head, shoulder, shoulder. It's looking good. We're in this channel now to the upside. Pretty steep. Moving up to VWAP. $100. Yeah, I mean, the ones I'm getting are a little cheaper than that, but yeah. I'm gonna start importing them from Mexico. No, I'm just kidding, not Mexico. Use above VWAP.
And it's yet to trade, so I will keep that on my radar. That we might not see a trade at all today, frankly. But we'll leave it there. Appreciate the insight, Kevin Green.
Oh yeah, you have a well pump.
For the network. Now I'd like to bring back in Alex, and it's time for FOMO, and we are talking all things Carvana.
Yeah, they release copper. That's what's killing the bacteria in the algae. Yeah, you don't want your copper levels to get too high. Definitely staying. It turns water green. You go swimming in it, it'll dye your hair green. Yeah, you have to manage it a little bit, but it's crazy. It's just, I mean, it's what they've been using to purify water and even the earth for, thousands of years. It's the big chemical companies that sell chlorine that have, I think, just been able to keep it under wraps and it not ever really spread. It's like the most basic old school way of purifying water and the earth. You can literally drive copper into the earth and like it'll help your garden and stuff.
Just a tremendous amount, but we talked about it yesterday as well. Zoom out even just 2 years, and I don't care how big that percentage rally was yesterday. On a long enough chart, you don't even see it.
You don't, and I think that right now there seems to be at least some hope that with this, broad.
You have a well, so you never had you don't have a pool pump yet?
Wouldn't necessarily be surprising. This is something that a name like AMC has done with a.
So whenever you're running your pump, it was just your well pump pumping water in. It was never circulating. Yeah, you definitely get that. That's even more crazy. So you weren't even circulating your water at all. You were literally just pumping water in and then a couple ionizers and a couple tabs. You're crazy, man.
Which has not yet been profitable and doesn't really have profitable outlook, at least for the future. So the analysts that were reacting to yesterday's raised outlook for their second quarter.
That water's beautiful.
Fairly neutral. We saw JP Morgan keep a neutral rating on shares. No price target.
Is that recent? Is that this summer?
Second quarter outlook. They did say the upside to its second quarter EBITDA relative to consensus was largely anticipated following
glorious.
pricing on Carvana's prime.
I think Beyond just came down a little bit. I just got filled on calls. Yeah, a little drop there on Beyond.
Which is essentially now a pull forward story for the second half of this year. Wells also raising its price target to $50.
Maybe a stupid play, I'm not sure, but
with an equal weight rating. Also saying
I'm not liking it.
Right now
I got
see some positive second quarter EBITDA highlighting basically the same metric.
Beyond putting in trades now on Discord.
Investment spend looms do drive their growth. So mixed picture there. All in all, I couldn't find one analyst that was really had a strong bullish conviction on this.
July 14 calls.
Everyone is so hesitant, just given the fact that if you actually analyze its balance sheet, how this company makes money, its top and bottom line metrics, it has been decelerating so steeply on a year-over-year basis for now several quarters. It's hard to get behind a name just because we saw a 50% jump on one session.
Look, I said this on Fast Market. This company didn't reinvent the wheel. It just repackaged something that we already know exists, and it's already a relatively low-margin business. When you dumb it down, they buy cars and they try to sell them for more. How do you do that effectively? Well, you get really good at buying cars for good value, and you find
Treasury officials in Mexico stole items donated for earthquake relief in Turkey.
Scale issue. They may have an issue.
Stop using the heat in the pool to avoid copper.
The new idea of doing it through online and through the vending machine.
What are you saying, Mo?
But so far they haven't been able to do that at a profitable.
Stop using the heat in the pool.
There's always going to be
What do you
question
mean?
marks around this company because they didn't invent AI or some new meat alternative or anything. They were just repackaging an idea
few summers ago.
that's been around
No, I mean it's crazy that you can have clean water and not even be circulating it. It just goes to show how well increasing your copper content cleans, just purifies water like crazy. All right, making another post on the Theta Farm membership. Another Theta Farm play I'm opening up actually.
Makes trading it quite difficult. Get away from the car vending machine, I think. That kind of makes me
That's the concept.
I know, but you need a parking lot full of cars, I think. I mean, that's what everyone else does. I mean, have you ever driven by one of those things? They're kind of ridiculous.
Probably rode in an Uber or something by one, yeah, but not very. I think maybe once.
I think there's one on the way going home to my parents that I see every time, and I'm like, gosh, get away from that concept. But just my own 2 cents, obviously, that'll do it for this FOMO segment today. Now, coming up next, we will look at Airbnb with some potential headwinds overseas from a looming tax law in France. We'll discuss that move more with Renita Young coming up next.
Brings me a heater at night, the copper gets super high. Oh, really? Is that just from the reaction from the warmer water with the copper? You have an ionizer too, Mo? I don't have a pool heater, so... But that's good to know. I mean, my pool definitely heats up during the day. My pool's big enough to where one of these floats is like perfect amount. I'm not getting too much copper. Tags that toilet paper. Okay. Yeah, it's good to know. I mean, my pool heats up definitely in the summer. So I might have to pull it out sometime, but so far it's been like the perfect balance. I've just slowly been backing off. Been slowly backing off my chlorination and my just pump runtime. I'm down to like less than half the usual time I run my pump, which is also, since it's salt water, it's less than half the amount of chlorine. So half the amount of chlorine, half the amount of pump time, which is amazing because just the pump runtime I'm probably paying that thing back in like 2 months just from the energy. Now if I didn't have salt water, then I'd pay it back in 1 month easy if you equated in the cost of chlorine.
And initially, actually, on the session earlier today, it was up as much as 5%.
Yeah, my pool like it was just like the perfect thing that it needed, and now it's like perfectly balanced. Amazing. Usually you'd get like some orange algae, some tinge in the shade, you have to brush it off, and every week, once a week or so, you have to run the pump all night, and because I don't have any shade, so it also, and I don't like to use uranic acid, so all the chlorine just gets burned up from the sun. So yeah, it was like hot days, especially coming into summers, like I was always fighting it, having to run the pump like around the clock. Then we get algae, and then my filter would get all dirty, and then have to replace the filter sooner than I should have, because yeah, it's like the perfect thing, man. I'm so stoked on them. Alright, we're at VWAP. I don't know how to close these, or I guess I'll put a stop on them. It's a little profit, but I think we keep going.
So France wants to close that tax loophole that benefits Airbnb and its competitors ahead of the Olympic Games. that's going to come in Paris. And so lawmakers, they're working on these plans. It's not clear if they
No. This salt is very. It's the same as your tier.
twist here. Airbnb is a corporate sponsor of the Olympic
And mine's even less. I have mine like 2,800 parts per million right now, which is a little lower than it should be, but it's been fine because the ionizer. No, if I had known about the ionizer, I probably wouldn't have gone salt. Just because you don't even need to. You can use such a small amount of chlorine to keep it balanced. And it wants a small amount of chlorine. With the copper at the higher levels that you get with the ionizer, you only want like 0.5 of free chlorine instead of like 5. If you have too much chlorine, then you have bad reactions and you have the staining and stuff.
That's exactly what I take away from it, you know. And then also, when there's corporate money involved, who knows where the support may go or what may happen as a result of that anyway. So this is just a wait and see. It is developing.
The solar, like we were saying, is probably not worth it, Ace. I mean, it'll be cool, but probably not worth it. And I don't think you could really... You'd have to customize it to be able to run it direct. Like, just when the sun's out, your pump runs. I looked it up, and it looked like there was... there were some pool pumps that run on DC, which is what you would need to run directly from your solar. But you're still going to need some kind of regulators, so it doesn't like overvolt the system and stuff. But the pump for the DC pump was so expensive, way more expensive than a normal pump. I don't hate you, lords. Your investments hate you. Dead Sea salt levels. Wee. Oh yeah, barbecue's holding up good. We maybe got our Friday dump yesterday. I mean, we'll see though. Day's not over. Still kind of a bear flag here, but optimistic. Stupid for not selling on Friday. We called it out, that bull flag that failed. Beginning of the downtrend. Am I climbing up here? Look at this channel it stayed in. Yeah, if you have batteries as a part of it, then much more possible then. And it might even be cheaper to run an inverter and just get a normal pool pump. You get a pool pump for like a couple $100. Not even. You get one for, well, you're gonna want one that's pretty enormous for that huge pool. Oh, you have to look it up. I'd figure it out. Running it just straight DC would be sick though, because you don't have to mess with the inverters or anything. Yeah. And just running it raw off the sun would be cool too. Like, it only runs when the sun is on your solar panel, which is convenient because that's the time when you need to be circulating. It's more necessary then, at least. And if you want to get fancy, you can get some solar heating. Like just raw solar heating with black pipes. Run your pool pump piping. Have a little bypass and have real thin black pipes that kind of coil back and forth for whatever, 1,000 feet or however long they are. Put them on your roof or just put them out in the sun. You can regulate your temperature that way too. If you want a heated pool, which it sounds like you do if you're just getting started now. That's a much more simple way to capture the energy of the sun. Just use the heat. Black pipes. Dark horse rally? Like after? Yeah, I think for sure. It depends on what the bid's at. I think we'll rally straight to that price probably. A rejection here maybe? Let's see. We are back to VWAP, so might get a little turbulent around here. Sand gravel mix? Yeah, that's a filter. That's a sand filter. That's actually not that uncommon at all. Those are pretty common, and those work well too. I mean, what's nice about those is cleaning them is much easier. You just back flush them, so you just run the water backwards through them, and then dump all that water, because it grabs and it filters all the water going in a certain direction. And you run it backwards, it just like basically cleans it. So the paper filters are nice, but you have to manually clean them. Yeah, those solar pipe things. Yeah, they look like solar panels on roofs. But yeah, they're not. They're solar panels, but they won't be shiny usually. So it's that's a pool heater, solar pool heater. We've got a shower, a solar shower. It's actually sick. It's so hot. I've actually blown up like 2 of them just because it gets so hot. I'm gonna rebuild it and like do a custom one with a big black circular PVC. We just bought these ones and the plastic's too thin on it. It's good for heating the water, but it gets so hot that it eventually just explodes.
But also
That engulfing on the 5-minute?
Amazon, which had been, of course,
Probably close this. Just see if it gets stopped out there.
is now looking to add companies like Paramount, but also HBO Plus to their subscription-based model.
Yeah, it's rejecting VWAP.
Distribution, but also
See if you can hold.
Sharing with companies like Paramount and also HBO Max.
George, you've described several kind of different silos of this business, and I think people could be forgiven.
The structure's still there, so it sounds like you had like a custom built. It's like a pit or something. Usually they have them in like a canister, because they sell them. You know, it's a pretty standard pool filtration, like a big tub canister thing that the water flows through with sand in it.
And it sounds like it's not that simple. It sounds like a company like Netflix, which just does the one thing,
made of plastic.
Original content,
Got like a pressure gauge on it too and everything.
To be the winning way.
It is. I mean, if you just look at the price performance, that seems to be the case. You know, you look at Disney, you have to think about it as a premier global international brand. That stock has not fared very well. It's not necessarily because of, you know, ABC and of course their traditional linear television exposure.
I don't count these as engulfing with the wicks. You just count the bodies. So we'll see. Might be bull flagging up here. Nice little inverse head and shoulders playing out though. Broke the neckline here. So if you wait till the neckline, it was not much of a rally, but grabbed it at the head, which you could have on this RSI divergence that we pointed out. You try to be careful with the getting chopped out and whatever. But if not the head, you could have grabbed at this shoulder.
Because again, subscriber growth, it actually seems to be
I grabbed it like right here after I realized I missed the shoulder.
Password sharing, and so when you have a purely digital-based revenue business like Netflix, you know, the incremental revenues really cut down or come down to improvements at the bottom line. I think things are looking pretty good, at least on a forward basis from a financial standpoint. All you have to do is look at the estimates for the next 2 quarters after the one they're going to be reporting next.
HKD's back down.
Improving for Warner. So It's starting to look constructive on the chart as well. I
Zero.
think $16 or so, or 15.
Just come back down to 0
on the chart is starting to look maybe an area of a breakout resistance. But until then, I think it's going to be
trading.
still challenged. Last thing I will say this: I talk about debt a lot.
Dude, what a pumper! Both of them, both the pump and dumps.
$45 billion in debt.
Well,
And again,
T minus 11 days for barbecues peak.
But you know, that's still
See if that DD is true. Let's put it in.
Point of net income for the
I think it says the peak is in 11 days, so it could start rallying anytime.
Synergies, expense reduction, a little bit more
There's
visibility.
11. Yeah, 11 trading days.
Foresight going forward. You know, there might be some analysts which pick up on the fact that the earnings estimates for the back half of this year are actually positive and improving versus negative, and actually finding sort of a convex area next quarter.
Yeah, and George, I'm curious your thoughts, because oftentimes when we talk about this name, we compare them to a Netflix, but frankly, like
if that's the peak,
different companies
we get a gap fill for up at 60 cents,
with the box office now into the latter
or
half
for up at $1.
We hear about this sort of up slate of content.
Based on these moves so far, I think we'll be like 60 cents.
Titles coming out, and all I hear about from those that are big AMC fans is that the movie theater is
Good
coming
what?
back. I mean, could that provide
Those 390%.
Brothers, because it's oftentimes, I feel like, forgotten about the fact that we do have some pretty major titles coming out in the back half of this year.
Yeah, that's the thing. I mean, this is not, of course, a company that distributes like AMC at the retail level, but you know, Warner is a
almost
fantastic
100.
name that has a brand catalog. And
Oh, gotta look at it logarithmically.
At the end of the day, you have to think about those.
These look the same, but percentage-wise, they're totally different. That's crazy.
With, of course, new hits coming out. That certainly could be a catalyst for the company, but you know, overall, you know, I think there's just been such an overhang for this group. I think there's room in the streaming service for all of them because they're all very unique with different content. But I think those
60 cents would be 200% or so.
In the streaming business that are attached to traditional linear TV have been the ones that have been struggling.
All right, yeah.
But nonetheless, you know, if they can demonstrate
Buys moving up more here.
more visibility, I think this is one to keep an eye on. I'm not saying it's
a flower pot.
It is starting to look constructive when I looked at.
Yeah, it sounds like something just custom they built.
Free cash flow, which they're expecting in the back half of this year to publish or produce an entire year's worth of free cash flow.
Oh yeah, just a big old custom one. I mean, you could do another sand one. You could just buy a whole canister or whatever. I don't know what I would do. I've only had paper. I haven't really researched pros and cons of both. I mean, it wastes water when you clean the sand one, of course, back flushing it, because you just drain out the water. But definitely easier to clean. So maybe that's worth it. I don't know. Maybe it doesn't filter as good as the paper. I don't know how often you have to replace that sand. Cleaning a paper filter, though, it's a bit of a chore. I've used everything from pressure washers to little like combs designed for it with pressure that comes out, like water and combs. Which that's kind of what we're using now. Pressure washer works good too, but it kind of wears out it out faster, I think. All right, I might. Hold on, keep holding this. I'm gonna close it. Closing time. All right, close that long. We'll see. It's definitely starting to fade here at the VWAP. Got a little head and shoulders maybe building too. Pulleys and donkeys. This is the way. GME melting up above VWAP now, 5.25. Anything real grand. All your ionized water. Could jump back to the long if we get a break of VWAP, but Might not. Coming up on 2 o'clock. Thanks you guys for your support today and this week. Appreciate it. We're at 46 likes. Another day, another postponed deadline for barbecue or bankruptcy. Blue Apron's consolidated nicely. York came down a bit. I guess I'm not saying waste water. I guess I'm just saying the amount of water it pulls out of your pool. So once you have a pool filled for more than a couple weeks, you'll, I mean, depending on how rainy it is there in the summer, I imagine it's pretty dry. But you'll be fighting evaporation. Some it might not be too bad for you because you have a lot of shade, but you're still gonna get evaporation, and your pool levels are gonna just drop. And you have to probably. But yeah, putting water in their pool isn't hard because you just have a well, so that's convenient. I have a well, but it's not good. Got a lot more like minerals in it. Definitely stains. But maybe I could now with my ionizer. I could use the well to fill it up. It's not a convenient setup like yours, so I have to use a hose and.
Going into the weekend, poised for weekly gains. Bit of a mixed picture. The Russell is negative.
Oh, I thought that was playing. Oops.
Seeing some weakness in small caps there. But the other majors are higher. The NASDAQ leading the way, up about 0.75%. Tesla driving the NASDAQ higher. Meanwhile, the Dow up a modest 53 points right now. Strength in tech, healthcare, and financials being limited by weakness in materials and cyclicals. Meanwhile, the S&P 500 up about 0.3%, on track for a 4-week winning streak and notably trading above 4,300. Taking a look at some of the other futures products, we're seeing some modest strength in the dollar, but weakness in gold, crude oil, Bitcoin, and taking a quick look at the VIX. Actually, that's higher, but still trading below 14. Some of the biggest stories in the markets. Let's welcome in Renita Young, senior markets correspondent here on the network. Renita, thanks so much for joining us to kick off this the last 2 hours of trading on this Friday. We're talking EV news. There's some EV news that's really shaking up shares of some companies, supercharging Tesla, GM, and Ford. But
Dish keeps selling off, down 11.
Fill us in about this deal between Tesla and GM.
Yes.
I'll be adding to my cash grid puts on this.
Still rising
maybe
today
next
on
week.
That news that GM is joining Tesla's charging network in 2024. Ford is even up close to its 4-month highs, but it's the other charging station companies that are down. I'm talking about ChargePoint, EVgo, and Blink Charging. Those are all tanking today on that news from Tesla. And some interesting trivia about that, Caroline, the fact that these three huge car makers are combining means that more than 60% of the country's EV market will now be able to access Tesla's network. And that should essentially make Tesla the primary network in the country. I mean, I think Elon Musk was thinking ahead of the game back in November when he renamed the plugs the North American Charging Standard, because that's what they're becoming, the standard for charging in North America. This also pushes Tesla closer to qualifying for a piece of the $7.5 billion in federal funding that the United States is pledging to build out EV charging networks in the U.S. But the White House recently said today that as long as Tesla would include the national CCS charging standard connection, they would be able to have access to some of that money. Now, there are some risks involved. Obviously, Ford and GM risk becoming too dependent on Tesla, but Tesla risks more crowded charging stations. However, Dan Ives over at Wedbush Securities raised the price target on Tesla to $300 from $215 and reiterated an outperform, Caroline.
Yeah, target for Tesla on the street. Shares up about 5% right now, up about 100% year to date. It's been a good month for Tesla, only 9 days in, and up more than 20% this month. But as you said, ChargePoint down 13%, Blink Charging down 10%. So definitely shaking up those companies. Renita, you're also watching Biogen. Shares have been halted pending this news on its Alzheimer treatment. Fill us in on what you're looking for there.
Right, so that's why they're halted. They are meeting, the advisory committee at the FDA is meeting to see whether or not they'd like to fully approve the Alzheimer's drug. This would be a pretty big win for Biogen and the partner that's helping it make the drug. Now, technically, the treatment is already available on the U.S. market after it got a fast-track approval back in January, but very few seniors can access the expensive treatment at $26,500 per year. So because of that, Medicare had restricted the coverage to only people who are participating in clinical trials, but there are no current clinical trials happening right now. However, this time around, Medicare is already promising to broadly cover that cost if the FDA grants full approval. So that's why it is so important that it gets this approval. It is the second Alzheimer's treatment that Biogen has tried to bring to market to come under an FDA review. After the last approval, however, it did not get broad approval. It saw a 10 out of 11 advisory committed members concluding that the treatment did not demonstrate a clinical benefit. Now, the FDA is making its final decision on this most recent treatment by July 6th, and it would be a win for the industry since the industry itself and Biogen has long looked for an Alzheimer's medicine and Alzheimer's treatment as well as something to replace some of its COVID drugs or COVID treatments.
All right, well, shares, as we said, halted right now. Heading into the weekend, up about 3% on the week, up about 11.5% year to date. Renita, thanks so much for bringing us those stories.
Of course.
Now let's take a look at the bigger picture with Ed Siddell, CEO and Chief Investment Advisor at EGSI Financial. Ed, thanks so much for joining us. Really appreciate you being here.
Well, thanks for having me.
So we're looking at a mostly higher market today, higher on the week at least. So there's some optimism heading into next week's Fed meeting. What are you expecting, Ed? A hike, a pause, or a skip?
You know what? I think there's enough economic data out there right now that's showing that the Feds could pause. Everything that's coming out right now is really what the Feds have been wanting to justify a pause, but it could wind up being a skip, depending on what the numbers are, for the July meeting. But even if it is a skip and there's one more raise, I think that's going to be the last one. The economy is slowing down. We're seeing that as far as the types of jobs that have been lost versus the types of jobs that have been gained. We're seeing it with the consumer credit numbers, hitting, over $1.25 trillion in credit card debt. Default rates are higher. So, the Feds are going to look at it and say, what we're doing is working. So, now may be the time to pause.
So either way, no hike come next week in terms of your view, but this pause versus skip could possibly mean a skip, obviously meaning just skipping the June meeting and then hiking again in July. You talk about the data, though, heading into that. Obviously, we get CPI and PPI next week, but are you most focused on the jobs data to really know what the Fed does in July?
For right now, because that's what we have. And, it really determines on the Fed's outcome is going to be how they interpret the data. And once the CPI comes out next week, I think that's going to have a big effect on the outcome. But again, all the data going into this is showing a slowdown. So, I think that may wind up being the icing on the cake that they need to say, you know what, we're going to take a pause.
It's showing a slowdown, but to put that into perspective, the labor market clearly slowing, but still pretty strong, still pretty resilient. Yes, we did see an uptick in initial jobless claims. Let's see if those continue in the weeks ahead. But there's a lot more talk of potentially skirting or avoiding a recession, a lot more soft landing scenario talk kind of being brought back into the marketplace. Do you think we can avoid a recession at this point?
I don't know. Originally early on in the year, I thought we are going to have a pretty deep recession, but just out of sheer will and spending and everything that the American consumer is doing, it's almost out of sheer will that we're going to avoid a deep recession. I think we're going to have a mild one, and if we see it, it's going to be towards the end of the year. But it's going to be probably more of a bump in the road the way that it looks right now. But again, it's really going to depend on what the Feds do. If they raise rates and continue to raise rates, it's going to be pretty painful. If they do pause and maybe just do one more raise at only 25 basis points, I think we're going to be okay.
So as I said, the major averages are higher on the week heading into that meeting. How much of this rally do you think rests on the Fed actually pausing?
Well, that's a great question because, when you look at the S&P 500, it's up. We're in bull market territory officially today, which is great. I'm very cautiously optimistic, though, because when you look at the data, only 20 companies out of the 500. That means 480 companies are not positive this year, and only 20 are. And so it's those 20 companies that are making up that gain. So, and it's a very thin line, and it's the same thing with the NASDAQ as well. So it's a very narrow corridor for those companies that are being successful. But the market is a very good leading indicator as to what's to come. And, once we hit that bull market going in, that's a good sign as to where the economy's going and how long, if we do have a recession, how long it's going to last.
Yeah, the rally's certainly been pretty skinny in terms of the S&P 500. But aside from today, the Russell is off less than 1%, but seeing, pretty substantial losses today, but overall higher on the week. So we're starting to see some small cap participation. Do you take that as a bullish indicator?
I do. That's a really good sign because, the small caps, that's the lifeblood of America, right? Small business. And so to see small business start to rally, that means that, Americans are getting comfortable. They're starting to reinvest some of their savings back into small businesses, reinvestment. So that's a really good sign. But again, I'm being very cautiously optimistic right now, but it's a good sign of things to come.
So you've said that you're cautiously optimistic a few times. What does that mean in terms of how you're actually investing your money? How are you putting your money to work right now? Or are you keeping it on the sidelines and taking advantage of some of those higher interest rates for cash?
Actually a little bit of both. We've had a large cash position most of this year, and we've slowly been redeploying that capital, over the last 60 days. And we're going to continue to do that. And that's what I mean as far as being cautiously optimistic. I don't think now is the time to go all in. But you don't want to be all in cash. You don't want to be all in the market.
Apron, 61%. It's just consolidating. Nice range.
Market goes the other way. You definitely don't.
This little pendant here.
You're already sitting in cash. So, slowly redeploying some of that capital for us.
Here's where it breaks out.
Really important. And
flag.
We're looking at those companies that have very, very strong balance sheets. And that's really what we like right now.
Is this the reverse split? Yeah, I might pick some up if it breaks out actually. Hold over the weekend.
Any more specific about how you're redeploying that capital outside of just looking for quality names? Any specific
Apron's got
sectors that you
high short interest, I think.
Believe it or not, it's not exciting, but I like manufacturing. I like a lot of those sectors.
No data available.
Taking a really huge here, and we're focusing a lot on.
That's interesting. On Eyebrow Desk, there's no data available, it says. But it says there's a 14.4% fee, 10,000 shares available. No chart. It doesn't go back very far.
So finding value in manufacturing, are you comfortable putting money?
Well, that's not many shares available.
Right now, any of these AI plays?
Only 4 million float on this thing? What the heck?
I think now
52 million market cap? It's actually not bad.
If you're not already in, I think it might be a little bit expensive to get in. Same thing with Apple and
Not bad at all.
and even Google. But any of the AI, and that's a really, really good play right now. If you're in, I would hold it, and incrementally kind of continue to go in and watch it on the dips. Just like Nvidia, I mean, it was up over 400, it's back down, and take advantage of those dips a little bit. But again, be very cautious when you're going in.
Yeah, Nvidia off about 0.5% this week, up higher today, but man, up
almost banned homelessness in the daytime.
Year to date.
I like to just be homeless at night anyways. In the daytime, my home's everywhere.
Oh, thanks for having me. Have a great weekend.
Weekly RSI.
Appreciate your picks.
Starting to tick up a little bit. Not though. What do you like about it? Just that it's low? Pretty curious on Apron.
We'll have some reasons to consider it and other sectors to watch. Stay with us. We'll be right back.
I put the line in the sand for barbecue. Got 11 days to peak. That puts it at 626 on Monday. It's low and across the 14 simple moving average. You have moving averages on your RSI? That's crazy. I've never seen that before. Apron, let's see if it's breaking out. Only get shares. Real? The volume. Eyes coming down here. There it is. Alright, I'm taking Apron. I don't have any day trade. Oh, false breakout. Maybe. Let's see. I don't have any day trades, so I will be holding this over the weekend. I think I do. Maybe I can. Maybe I can day trade it. Make it real. Make it real, Apron. Yeah, I don't have super low latency on. You got the 26th of June? I kind of joke on dates. I don't try and put dates like that on it. That's just from that Wall Street Bets Elite. I think he said 11 days from HKD and top pumping. And that's 11 trading days, and they pumped today. So I don't know. Totally random. Kind of a joke. I just put it there in case. If it does hit, then I'm gonna say I'm a genius. I knew it all along. Apparently that'll be the peak of it though. So the rally could start anytime.
Let's take a quick look at Bitcoin. Bitcoin's lower today, only off about 0.4%, trading around 26,500.
The computer.
For some more names to have on your radar and market trends to watch, let's welcome in Burns McKinney, Managing Director and Senior Portfolio Manager at
12th. Start on the 12th.
Burns, thanks so much for joining us. Really appreciate
Yeah, it makes sense. Makes sense for it to start maybe next week. With catalyst for this weekend.
Lower returns and higher volatility ahead. Why? What causes it?
Well, we just entered a bull market.
I said 26, huh?
Really
Yeah.
Right now, we're in a position where it's really hard to argue that stocks are
On
cheap
Apron.
by nearly any metric. Right
Let's
now,
go.
on a price to earnings basis, the S&P is
Good day for me, Mr. Rip.
long-term average looking at cyclically adjusted earnings,
Apron toying with me with that break, that volume.
It's looking pretty steep. As a percentage of the economy, really U.S. equities are a little bit pricey by just about any metric.
Yeah.
That for all intents and purposes, we're probably pricing in
False break.
a bit more of a softer landing, and so investors going.
If this holds up into close though, Apron, it might be a nice runner. I have a big gap up on Monday, honestly. So far, it's a beautiful bull flag. I like the catalyst of just nothing but a reverse split.
Right now, it looks like the investment community.
Oh, it actually has a catalyst. Distinguishing debt with fresh realm.
The central bankers have been pretty adamant that's not going to happen, and so
the financials on Apron's actually not too awful, really.
Surprise would probably be
it's improving.
To the upside, and if that's the case, that
sort
probably
of.
would lead to higher levels of volatility. If you see that, we always say that one of the best ways to blunt that volatility is through dividend payers, because capital gains or stock prices, they can go up and they can go down, but dividends are always positive, and so that's one of the nicest ways of kind of.
What are you getting your dates from?
All right, I want to talk to you more about some of the investment opportunities that you see in this market in just a bit, but first I want to talk about pricing in that surprise if the Fed doesn't cut rates or what could send this market lower. And you have your eyes on S&P 3000, so there certainly could be better, cheaper
Carvana plays are up
if we see the S&P go down that low.
34%.
Is that your base case or just your bear case?
No, that's not our base case.
I guess it has sold off 80% today. Wow.
Because equities are pretty fairly priced right now, you probably could expect to see the markets consolidate some of the recent gains and maybe trade flat to sideways for much of this year. That said, if the market does take a leg down, what we've kind of advised is that if you see things dip down into the mid 3000s, then we probably start to be more aggressive. And if you actually were to see a situation where the market gets down to the low 3000s, that's a place we buy aggressively. But no, that's definitely not our base case. I would argue that I think that going forward, if things are pretty fully priced, if anything, it probably is a good stock pickers market, because whereas the S&P 500 is trading around 18 times earnings, but if you actually remove those big 6 tech names that have really been driven so far this year by AI and have really rebounded from having been hit last year, the remainder of the market is actually only trading in the mid-teens, and so there are good values to be had for active investors and stock pickers.
All right, so let's talk about your stock picks where you're finding value. In terms of sectors, before we get to specific stocks, you like healthcare, industrials, and technology. So obviously,
when I was looking at it with those parameters, I had it starting to rally like this week.
Tell us why these 3 sectors are
maybe next week.
And how you're putting money to work.
Just looking at how it's reacted since it's been on OTC, how it ripped up 4 days, came down, consolidated for like 2 weeks, and ripped up for 4 days, which is what we had. And we're now on the 2nd week of consolidation, so I think we're due.
For capital spending, companies have actually been pretty tight with their spending. So
I'm moving up a little bit here.
Longer-term drivers such as you have defense spending, a lot of the infrastructure spending that could be driven by some of the recent legislation could also be a driver. And you're not really paying a premium for it, so you're getting good valuations in the space. In the case of the tech sector,
I don't know why I'd go long here. Just it's breaking VWAP.
Perhaps too far, too fast. But if you look at, for example, companies.
No, I figured you meant a longer time frame.
There are definitely opportunities to be had.
I was just sharing with you.
See the most cash on balance sheets.
Fine.
You see some of the lowest dividend payout ratios, and as a result, you're seeing some of the best dividend growth is coming from the tech sector. And there certainly are a lot of long-term secular trends at your back, whether it's, again, the AI,
I want the long, but I don't know.
Commerce as well is a driver for the sector overall. And healthcare is, I think, kind of interesting because it is a bit of an uncertain market. We've been kind of sort of hanging out in this equilibrium for really the last several months. Investors have been predicting a recession for the longest time, and ultimately we probably will reach into one. But healthcare is kind of one of the interesting sectors because it kind of straddles the worlds. It's not purely.
So what kind of cycle are you expecting to start?
It's not purely defensive. You also have quality and growth characteristics, and so. In a
next week,
like this, they can offer
barbecue.
Without sacrificing capital gains.
Like, what's it going to compare to?
Okay, and then in terms of specific stocks,
this rally in OTC, this one, this one,
not necessarily in your sector picks.
This one.
Only up about 1.5% year to date. Crown Castle, a
This is weekly candles now, so
16% year to date in EOG Resources, so an oil and gas company, but down about 10% year to date. Tell us why you like these names.
I'm assuming it's repeating one of these other ones. Which one would you say?
Stanley is one. Again, we're contrarians. We like to look for things that are out of favor. You know, the banks and financials have been hit pretty
Here,
hard this year. Morgan
1 to
Stanley
30.
definitely not, dodge that, although it has held up a bit
One
better
after
than a
RC
lot of
bought
the
in.
regional banks and some of its banking peers. And, that's a name as a result of that.
I'm
Trades
moving
around
up.
15 times earnings. That's a pretty steep discount to the broader market. You're looking at a dividend yield that's pretty much in line with the
Apple
10-year
quadruple
bond yield.
top.
Too many names right now with the 10-year higher this
Do
year.
it.
There's not too many names
1,
that
2,
raise
3,
that.
4.
And that's not a yield that's stagnant. They raised the dividend by 10% over the past year, and so you've got good dividend growth there. And they really are a poster child for companies that have done a great job of transitioning from the volatile trading and investment banking business to asset
Moving up.
management, which is something that's a bit more stable, it's sticky, it's cash flow producing, and generating high returns on capital. And so, it's a little bit of a way of a kind of being a contrarian play and getting some of that financial exposure. The baby's thrown out with the bathwater. In the case of Crown Castle, that's another area in which we're kind of looking to mine areas that have been out of favor and find those solid names within that. REITs are the same way. REITs have been hit over the last year as interest rates have risen. The REIT sector has fallen, but not all REITs are the same. There's a lot of opportunity for individual stock picks within that. And one
Week of January 2021.
REITs that we really like is the tower space.
Yeah, maybe.
What Crown Castle does.
Maybe.
They own cell towers, and right now it's a name that you're getting at about 15 times fund.
We're watching the SPY.
That's for REITs basically a proxy for a PE multiple. A lot of their peers are trading closer to 20 times. You get a nice 5% dividend yield.
I had the engulfing candle yesterday, but that's in a bull flag, and we broke out of the bull flag and consolidating up here. So, still kind of bullish on a longer time frame.
Demand for digital content. 5G is
For now,
profitable
could
for
flip
these companies.
before end of day. It could flip next week. Flip in a month. I don't know.
Long-term contracts, and so you have stability there. Really, what we think of it as being the towers are kind of a
And April months had a break.
play for the 21st century. There's a lot of great streaming services. Rather than pick which ones are
Which cycle do you think it's repeating though, Trays?
all going to have to take advantage of a faster pipe, and so the towers benefit from that. And EOG is just within energy space. It's just looking for quality within the space. EOG right now, you've also got about 3% dividend yield, and if you include special dividends, they've
So the Arrival founder, I guess, sold shares.
And among the
Not a good sign.
companies, they
Oh, I think it happened yesterday or a couple days ago.
to have some of the best management, the best technology, the best acreage in the space.
Can't believe I didn't take profits on this day. That was so stupid.
So as a result, they've drilled more.
I was sitting here and said it. It's like, if you want to take profits, is when you do it.
A lot of expertise as a result of that, and what that leads
I
to
don't. No,
is
not
they
me.
can do it
That'd be
for cheaper
foolish.
than those companies. Their cost of production.
Why would I do that?
On a per barrel basis is about $10 per barrel of oil less.
Do the same thing on barbecue.
Suggests that even if oil prices were to pull back a little bit more, they give investors the opportunity to play a little bit.
Get a fatty green candle to close barbecue.
All right, well, we appreciate those stock
Let's fill that
and
gap at
sector
24
picks.
cents.
Managing Director, Senior Portfolio Manager, NFJ
Back above
Investment
23.40. Quit messing around down here.
joining us. Coming up, the Canadian wildfires and their smoke have become major news. Next, we're talking one-on-one with the CEO of Bridger Aerospace.
Seems like it's
the only
just-
publicly traded firefighting company, which just sent its teams to help in battling.
Oh yeah, I remember hearing about that.
We'll be right back with that
You guys
conversation.
remember that? That was a while ago. Oh, I think shorting Apple 175 put June 16th. I don't think you have enough time. You give yourself enough time to be right. The calculation, I deleted it. I just have my target. Oh, I see. 175 is pretty far out of the money too. I'd give yourself more time. More time. And it can make its move, and you can still have 2 months on a contract, and like you have to be close on the expiration. Got a 180 for June 30th. I'm thinking like July monthlies. July 20th. Sorry, 21st. What SPY's up to here? I chopped around the WAP. Don't go any further out of the money either. You're already pretty far out of the money. Yeah, 175 is way out of the money. I guess it's not that bad. The point is you want it to be in the money like right away. You know, if you're getting a 175 put for end of this month, you want this thing trading at like 170 like next week. I try and shoot for like just basically at the money, as close to the money that I almost can get, like maybe a couple strikes, because I want that thing in the money as soon as it can be. I don't want to be waiting for it to get in the money. You still have tons of leverage. Make it a spread. Why do you need unlimited? Not even unlimited, but why do you need naked long puts? It'd be much easier to manage to sell also. You think it's going to 170? Sell at 170, buy the 175. You've been losing, just increase your odds of winning. Very easy with options. You can see it right there on the options chain. The delta, those are your odds. 80 delta, 80% chance of it being in the money. If you're looking at spreads, you can see a probability calculator. But we're also kind of trying to time the top a little bit. You know, that's... Yeah, we'll just go slow. It's not like it, once it starts coming down, you won't be able to catch it. You very easily be late to it and still catch a huge move down. Like back here. It's coming down. People are trying to time the bottom, time the bottom, time the bottom. It keeps coming down. Keep trying to time the bottom. Why not just wait? Wait till here. Wait till it's fully flipped around moving averages. Then go long. And look, get all that upside. Like you missed nothing there. Now we're at the top. It's still going up. Why not wait? Wait for it to fill a gap. Wait for it to show some momentum. I don't know. I tell myself this stuff too. It's not like I don't do the same thing. Buys come down a bit here. We'll see. I do see like a head and shoulders there though, and like you can find all that stuff. So if you're planning on getting more than one, which you could if you're getting, probably if you're getting spreads, you could scale. You know, if you're really trying to time the top, you could get one today. But that's why you want a ton of time, because you are trying to time the top. You're not catching momentum. You're catching the wrong momentum. Momentum's not in your favor. Apron. It's not going down this week. We're at the end of the week. I shorted Carvana actually this morning. So, I don't know though. I mean, we'll see. I might be closing out of these tomorrow, Monday. But, yeah, I shorted it. I think it's at a good resistance. I don't have any reason to be going long on it. It's got a gap down here. I mean, I guess I got kind of lucky with my short this morning. We were just watching it and I saw it getting on my line, and I saw it head and shoulders in the 5 minute. I'm like, kind of bearish on the market also, so I was thinking I grab a short. So I grabbed on here, that head and shoulders. So yeah, before going long, I'd wait. Got a lot of momentum to the downside. Still same deal. But that being said, I mean, it's so volatile, it very well could be just consolidating here, and next day could do something crazy upside. But yeah. I'm, I guess, pretty bearish on it. It's not bad though. I mean, pretty good move from the earnings. I maybe would close the plays I opened today just because they're up so much, but I don't want to use another day trade, so I'm waiting until next week at least. And they're spread, so I can just let them sit and marinate. No rush on it. Kind of like my AI spreads. So AI, I just need it below a certain price by a certain time, and I'll have max profit. Need it below, for both of them, I need it below 35 by July, middle of July. So I think it'll come down. It was looking much more bearish when I opened it. Still up on them, but yeah, this is kind of a crazy looking chart actually. But that's what's nice about spreads. Show you. I'm just waiting. So right now it's at this price. Even right here, if it just stays this price, or whatever, if it comes back to this price by expiration, I'll make a lot more money than if I closed it right now at this price. As it comes down, I'll make more, and as time passes, I'll make more. So, kind of the opposite of a long put. Long put, you need both. You need to go down and fast. Make the most. Maybe a little head and shoulders there actually. Fine, let me see. I'm not. Force this 230. SLDs after a run up will sell off heavily. I think keep that in mind. The after a run up, sell off in SLD. You're saying? What are you talking about? The whole market? SPY, Carvana, GME. A little shoulder there. Forcing it. Shoulder, shoulder, head. And it broke out of that channel. Still kind of choppy though. Stop. Yeah, it could. I don't know. I don't know what GME's doing. It's crazy. Yeah, I've held options for 6 months. I was rolling over barbecued cash secured puts for like 6 months. From literally right here. I guess I wasn't holding the same one, but I was rolling it over. I was still in the same play from here all the way to here. That was only 2 months, but I think I held a long time. I can't hear you, Rag. Apron. Oh. I'm liking Apron's chart still. I mean, maybe this is the neck, but you see a head. There you go, SPY's coming down. We'll complete a shoulder. Well, yeah, you got SPY moving too with it. Yeah, kind of that little head and shoulders you're looking at. But again, you kind of want, I mean, you can start scaling in here and add to it when it breaks the neckline. which would be here, 177.50. But that's on a shorter time frame. That doesn't mean it's gonna just totally flip on everything. That means it could come back down here, fill this gap, and then come back up, and then you're stuck in like a bull flag or just a channel. Okay, so we're up a little bit on that short. Put a stop. I don't care to ride stuff. Negative. Up on the day. But I do like it. It does look good. A little inverse beta on barbecue. Okay, Rick Morty sounds like a pretty great plan.
1864, as mentioned, down by about 0.75%, but all four of the
For how awful I traded yesterday, I've somehow traded today perfect, minus one trade in here that I chopped, where if I ended up holding it, it would have worked. But it's just crazy. Yesterday I ended up just, oh, I just held it. Just held my shorts all day, because I'm like, no way. I could have easily closed it here on that VWAP test and went long. Just didn't want to. Wanted to force my bias into the market.
We've seen the bid activity and really continuation of the move that we've been seeing this year. Keeping a close eye on small caps, so wait and see if they can start to join in.
Well, we're seeing this move higher in stocks at the same time that Treasury yields also are ticking higher. Taking a look at the 10-year, up at about 3.7% right now. What specifically stands out to you in terms of yields?
Well, that in general, you know, the fact that we've seen yields inching back up and the NASDAQ continues to rally in the face of. I mean, keep in mind, a big part of what in the past was
Liechtenstein.
Yields on the move higher, but I think because
Pretty sure he was a character on the game Wolfenstein.
10-year here at, we're talking 3.75, just below it right now, in the middle of the range that we've been in basically since September of last year. And then also, I think, Caroline, there was a bit of a sigh of relief this week. We started off the week after the debt ceiling crisis, the resolution thereof, and the bill actually being signed. There was a large issuance on the short end of the treasuries, and ultimately it did not see the spike that we thought it would in terms of yields as far as the return. So we've got, again, indices right now just kind of there. You can see the 2-year watching yields, which have been very much range bound as we've been inching higher, but nothing at this point to raise many concerns. I think
MACD flip bearish. We got red into the 9.
Next week, right? Do we get a
like momentum indicators.
Raise rates on a bit of surprise like we saw from the Bank of Canada, the RBA earlier this week, or do we get that skip, that pause ultimately? I think a lot's going to depend on the language if we do not get a hike, and that seems to be what the market's priced in at this point. But yeah, after earnings really didn't disappoint to the extent that they have, the market continues to exhibit a fair amount of enthusiasm as we head into the end of the week and ahead of that very closely watched event next week, in addition to some of the inflation data due out as well.
Yeah, certainly. All eyes on the Fed and inflation next week. Ben Liechtenstein, thanks so much.
Liechtenstein.
Now let's take a closer look at regional banks. Joining me is Eric Hovde, Chairman and CEO of Sunwest Bank.
Oh, sorry, that was me.
Thanks so much for joining us. Really appreciate it.
Great being on your show today.
So Sunwest is based in Utah. It has a focus on
Oh, these are the
so I'd love a status update from
these are the guys, the pilots,
in terms of inflows, outflows, and
firefighters, right?
Sentiment among your customers. Is
Or no, it was a bank. Never mind.
Since March?
Well, we're
I was way off.
a lot of banks because we pride ourselves as being a bank that has a fortress balance sheet. So we've actually had deposit inflows. But if you look at the banking industry as a whole, it's very clear that you've had significant deposit outflows. And it's not just from community and regional banks. A lot of misnomer has been applied saying that the biggest banks are picking up a lot of the deposit inflows. But the reality of it is they've been losing deposits as well. A lot of the money has been going into the money market, largely Treasury money market funds. So it is an issue that is impacting the banking industry and driving funding costs higher.
I'm curious, just in terms of how you're communicating that fortress balance sheet to your customers, because I think so many customers probably didn't really think all that much about their bank's balance sheet. Maybe they're just focused on that 250,000 FDIC insurance, or maybe not even that. So how were you able to keep the deposits coming in versus going out amidst so much uncertainty?
Well, really a two-pronged reason. One, we never stopped focusing on deposits. When deposits were flooding into the banking industry in end of 2000, 2001, beginning of 2022, a lot of banks were saying, we don't want deposits. I've always believed your biggest assets on your liability side, your core customers are your core depositors.
Kind of fake broke out earlier. There we go. Nice volume push.
So we've always put a focus on gathering deposits. Secondly, what we do is we talk about our fortress balance sheet by talking about our capital levels being.
It's a good sign of stocks rallying to a Friday and hold up high levels. Just saying. People aren't taking profits into a Friday. You're looking for potential for a gap up on Monday. That said, that's more the case probably with stocks that are rallying most of the week. Whereas Apron's case at least only really rallied today, so that principle might not apply.
So many concerns since March of a credit crunch. You're seeing deposits continue to come in. What about in terms
Future Aviation.
of
Is this the eVTOL one?
Have you changed any of your loan requirements?
Volume today.
Have you seen any change in demand for loans?
Yeah, eVTOL.
Well, it's
Always
very interesting because there is a
speaking of, how is eVTOL itself?
I'm going to use an analogy that may be a
Little
little
invert head and shoulders.
like the gas stations to the economy.
Oh.
If gas is plentiful and cheap, then you have more cars and trucks on the road. Well, as the price of gas goes higher or gas stations start shutting down, you have less activity on the roads. Well, that's how banks operate with the economy. So what we're seeing right now is lending. Most of the banks are contracting very significantly. Commercial real estate is already seeing the effects of that. So I do think a credit contraction is coming, and I think it's going to be very problematic for the economy as a whole. So we're entering to some difficult times.
His coin was a roller coaster today.
We're seeing a lot of people can't find loans at other banks. They're coming to us. We're one of the few banks that are continuing to lend, even though a lot of the biggest banks have just shut down areas of their lending, like commercial real estate.
What are the implications of this credit crunch that you speak of?
I mean, the power hour spy is about to get volatile. Oh, I got stopped out. No, I didn't.
Next week, that they could continue to hike. Is the worst of the banking crisis behind us, or are you suggesting that it's not?
Oh, I don't think the worst is behind us. Again, the ones that failed,
Yeah, about to get stopped out.
Silicon Valley, First Republic, and Signature took significant duration risk. But the whole industry has a lot of securities and loans sitting on their balance sheet that are very underwater today, given the rise in interest rates. So I think, there's a pause right now, but I think as we get into the credit cycle, which I see
what do we get for power hour spy?
second half of this year and through 2020.
Wanting to hold your forward shares?
A difficult time with credit losses coming.
You might not if we get a sell-off in power hour.
Exacerbate the credit crunch that is already underway.
I don't know. I'd probably be happy to let those go.
The economy as a whole, I think the economy is going to be taking some serious hits. I'm forecasting the economy will be in recession in the second half of this year, and probably a pretty good recession through 2024.
How deep, how long is this recession?
A lot of that will depend on how bad the credit crunch gets and how long the Fed stays at this level. They're kind of in a box right now. On one hand, I think they know that it would be better for economic growth to take rates down. However, the inflationary pulses in the system, if all of a sudden they started to cut rates, I think you would see inflation reaccelerate. Which is what happened in the 70s. If you recall, it looked like inflation was coming down. The Fed paused. Inflation started to reaccelerate. So I think they're in a very difficult position. I think they're going to be slow to pivot from the standpoint of lowering rates. I think they're coming to an end. Whether they move another 25 or 50 basis points isn't really all that material. but I do foresee that they're going to stay with the rate structure where they're at least through most of the end of this year until a significant crisis unfolds.
All right, we'll have to leave it there, but really appreciate your insights. Eric Hobdy, Chairman and CEO of SunWest Bank. Thanks so much.
Hey, I wish I had better news on a Friday afternoon, but I hope you have a wonderful day.
Womp womp. Thanks so much. Still ahead, we'll bring in our panel to discuss DocuSign, what stood out from its earnings beat, and how AI will factor into its future. That's next. Taking a quick break, but we'll be right back.
Alright, I didn't get stopped out. Brand new highs, you could not even close to new highs. No, it did move up. Not quite new highs, but looks like it's breaking out. 973 is the high on the day. How many? Is 3. Why does it not tell me I can't? I guess I'm holding my apron because I've done all my day trades. Oh well. Here we go. The financials actually aren't all that awful on apron at this price. Sold off enough. Where was it before COVID? Oh geez, this thing. What the heck? This thing's never found a bottom. That was the COVID pump. Wow. Bought apron at the bottom. Put that on a shirt. Free money bought apron at the bottom. Thanks so much for your support today, Ace. Appreciate it, buddy. Up with your pool. Apron is moving up. We'll see if it double tops up here. It does. It's kind of got a little cup formed. Double top and form a little handle. Happy weekend, homie. Adios. You know, barbecue at the bottom. We don't know if there's a bottom yet, though. But yeah, that'd be pretty sick. It squeezes. Some barbecue shirts. Down. Happy Money logo, just with like barbecue sauce all over the face. Barbecue coming down, by the way. Down 0.4. 2090. I'm about to get stopped out on these futures. Setting up another head and shoulders. Don't stop me out. Look, shoulder, shoulder, head. Come on. Hold. Don't want to cancel this stop, but I kind of do. Nice head and shoulders in the 5-minute too, if that holds. Yeah, let it just stop me out. Alright. Well, it only stopped me out of 1. Only 1 filled. See. Okay, now both are gone. Alright, see what happens. We're in 70%. Can't believe we missed this whole thing today. This basically open? Oh, 11 o'clock? It's like turned on like crazy at 11. 55. Classic first split squeeze. Mayor came down below VWAP. Never mind, just ticked back up to VWAP as we're looking at it. Green bean might be set up an RSI divergence. Head and shoulders on SPY. Back in. Why not? I'm merging that. Anything. Oh, we're coming into power hour. Maybe I should mess with this even. Apron bull flagging out of the breakout zone there. Bar rate keeps climbing. Only is the shareholder meeting next week? It's very slightly climbing. Hit a low of 7.5, up to 9.8. Very subtle, but they're getting lower on shares. But that's a pretty good sign.
For DocuSign, it means that they can't go and just lay back and kind of take it easy and rest on their laurels. They have to constantly be innovating or be rendered irrelevant, right? So I think that that's a very promising thing that we can expect to see from DocuSign, especially with this new CEO from Google. I think that there's a lot of promising things up there.
Pat, we only have about 30 seconds left. Any other buy ratings in this space on your watch list?
I got a bunch, but I'm going to stick on DocuSign for a second. So I used to be a lawyer. I used to draft contracts for a living. This AI opportunity is huge for them because they have the largest set of agreement data of any company in the world. And just the way, your kids are drafting their essays at school, you're going to be able to put contracts together using AI, using DocuSign, and that's going to be a win.
Dude. That's true, man. That saves so much time. Then you can just have a CPA like proofread it. Whatever attorney.
It's going to do it for the watch list. I'm Caroline Woods. Thanks so much for watching.
They get the general.
Because Market on Close is next. Have a great weekend, everyone.
All right, where we go? Got a little bear flag, little head and shoulders. Gonna break the neckline. Apron's just out. Down on apron. Whoa, apron's starting to get fleshy back in there. Okay, 2 minutes, 1 minute, 10 seconds. I might want to be green for power hour. Okay, power hour. Got VWAP right there. If it rejects it.
Is really what counts for the broad market. S&Ps also positive, but not by a ton here. VIX kind of inching a little bit higher today. We didn't have really anything as far as news flow today. Path of least resistance upward, especially when it comes to tech. We've got inflation on Tuesday. We've got the Fed on Wednesday. But right now it seems the market has pretty much sealed shut the options for the FOMC next week, unless you think that there's a possibility of a scorching hot inflation print, and you also think that Powell would react to a print a day before his press conference and his decision, then you pretty much know what's going to happen. They're going to pause according to the market. And from what we know about Jerome Powell, he does what the market tells him to do and what's been priced in. There's been moments during his tenure in which he's gone a little bit more hawkish than expectations. He's been a little bit more aggressive.
And up a little bit, 5.3.
But there's usually been a pretty good lead up to that. So
Burn still.
To be hawkish and rely on his data dependency claim, where they say they're data dependent, then maybe there's a possibility here. A scorching hot number could put a hike on the table. I only say that because the odds have been
Could be a higher shoulder too, like up here. Shoulder, head.
Just since jobless claims yesterday, we see the odds of the hike continue to diminish and get lower and lower.
But it's late in the day, it's power hour, it's near VWAP.
Like 75% chance of a pause next week. Markets were able to run with that. But the fact that there still is a chance that maybe our inflation print comes in hot, I think that's why you've got the dollar and 10-year yields pretty steady. Got the big hit in the dollar yesterday.
Yeah.
That's about it, though. We stopped at 103.5.
Yeah, IP's up 1.6, not bad.
Still hanging on to the range.
The green day on it.
Coming into this month, the dollar and yields were going higher. And then we had the really good employment print that put the hike back into the realm of possibility.
And he lost someone.
But as we've taken that hike out, the dollar and the 10-year yield have gone sideways. You should know next Tuesday, when inflation comes out by this chart,
I'm done for the day.
How to read that
Barbecue
inflation
you
print,
up.
no matter what the number says. If it's high, if it's low, if it meets, the dollar and the 10-year yield have, at least over the past month, proven themselves still as being useful as indications of Fed policy. Because keep in mind, if you rewind the clock about a month and a half ago, there were still cuts being priced into the market later on in the summer, and there was no chance of a hike next week. So throughout the last 20 days of trading, the 10-year and the dollar still remain at the high end, reflecting the longer-term kind of shift out of the notion that we're going to get cuts later on. So the setting going into next week is for the pause, but the possibility here that we're not going to get any more cuts. It's not
above BWAP now.
that the market was hoping
It makes a little cup and handle here.
And think
Be a retest of the high.
book on it until we get the print. In the meantime,
All right, Cameron. Thanks for all the support today, buddy. Have a good weekend
this week it was
on
Tesla.
Discord,
Kind of just handed
Twitter.
the baton from each mega cap favorite to the next. Tesla's
A
jammed.
little retraction. Wow.
4.2% today. Adding on to yesterday's gains. We're back almost to 250, above 240. Keep in mind, Tesla is still really the king in many ways. We're learning just to what degree it really is the king in the autos world, as Ford and GM now bend the knee to the charging layout that Tesla has already provided to the EV world. We'll talk some more about that here in a moment because it's causing some pretty major breakage within the sector. But Tesla also remains the
140 days,
as the high
peak to
beta
peak.
giant for the stock market and for speculators. It was Tesla, the ARK fund, and the whole batch of high beta companies that signaled the end of the COVID bull market. And since then, Tesla, despite huge percentage swings, is still downtrending on the chart. And I think it's important to take this into account with NVIDIA making highs, Apple making highs, and so many of the chip-making AI-centric plays breaking out to records. Your king of the swing and the high beta trade is still Tesla, and it's still actually downtrending. But based on what we saw from Microsoft and the others, I think an equivalent move for Tesla would be able to get back to its high from last year on this chart, which would involve a push upwards to about $300 or so. And you could still be in the downtrend. So it's important to keep in mind that Tesla's still actually been in this downtrend.
100 days sell, 40 days of accumulation.
Even with the market still strong, we've got no
Where's the rip in that?
from the crypto world and BTC. Watch it.
Accumulation's flat.
See what happens with the exchanges.
100 days is down.
CZ and Binance talk in the public.
Oh, look at that.
Because Bitcoin is like just.
Head and shoulders still playing out.
But you know, it's not real money. So, all right, let's bring in Alex Coffey and let's talk with Bernita Young too. Tesla's leading the charge here once again, and quite
Next week?
too, Renita, with Ford, GM. They're going to use the charging stations, but I kind of like it also because it's showing us that this is a market that's really separating winners and losers right now.
It is. So first off,
Like
not
apron.
only are GM and Ford bending
Especially if it
the
closes
knee,
and you're
they're
up here.
missing the ring because one of those vehicle makers, at least
Maybe
so far as we
beyond.
know, GM is going to start manufacturing its
If this thing
vehicles
bottoms
to be
out,
able to directly
it's
plug into Tesla's chargers,
consolidating.
starting with the 2025
Apron
vehicles.
beyond.
Today you see that shares are up.
Dish hasn't flipped around yet. Oh, it's almost filled again.
12,000
Close.
superchargers in America, but three
Dish
names
soon now.
are not doing so
Get another
well.
triple bottom down here.
EVgo and Blink Charging, those are all EV charging companies that create EV charging stations, and it's all because this push to make Tesla's plugs the industry standard.
Barbecue, really?
Squeezing out
That's me up.
competitors. In fact, the combination of these three, Ford,
Can
GM,
start moving up
Tesla,
next week.
that means that 60% more than that of the country's EV market will be able to access Tesla's supercharger network right now, and that should make it the primary network in the country for EV charging.
Last two.
Now,
Price
Elon
action.
Musk, he might have been thinking ahead of the game when he renamed the plugs the North American Charging Standard back in November. But this also pushes Tesla closer to qualifying for its piece of $7.5 billion in federal money. But the White House says that Tesla would not, or they would only qualify for this if they would include the national CCS charging standard connection within its charging stations. Now, there are a few risks involved. Ford and GM risk becoming a little bit too dependent on Tesla, but Tesla risks having more crowded stations. It's already seen a lot of its customers complain about the long lines at charging stations, and now that 2 other vehicles brands are added to that, it could be even worse. But as you said earlier, analysts still like it. Wedbush Securities raised the price target to $300 and kept it at an outperform weighting.
If the worst scenario is lines get longer, then you could probably imagine eventually they'll respond and build some more.
Eventually.
The moves in some of the other companies, though, just to come back to that for a sec, I mean, powerful stuff. If you go down 13%, you know, a lot of these companies really now are kind of facing an existential threat in a way I'm not sure the market was ready for. The charts generally had been pretty soft already, but to see them break down to, you know, new lows for the past year, it seems like a really big deal.
It is a big deal because by doing this, Tesla is strengthening its own supply chain. And they're essentially wiping out those outside companies who do now what it does. And it's really the one doing it the best, since about 60% or more of the EVs in the country will be able to plug into Tesla's chargers.
Charge point down 13%. Yeah.
It's moving.
Major shakeup, but at least
A little bit. It's grinding up. It's not really breaking out like I was hoping.
It used to be, well,
This pop right here,
like anybody mentions AI,
it's about to rip.
you're going to the moon.
I bought at that volume and a break.
Years back, anything connected EVs
Might be happening now. Let's see.
as well, and now we're finding out who's really got the merit and you know, who's been
Nice
able to
high close on a Friday is always good.
major kind of battle here, and it seems like Tesla, as a lot of people predicted, is winning it out. Because we focus, you know, on next week with the Fed, Alex, it seems like we've got a little bit less concern. We've got kind of a weight off our back as investors right now, the way the market has come around to this conviction call for next week. Is there any potential that it, you know, that the bus gets rocked between now and then?
I mean, yeah, it kind of seems like it did today, right? It looked like it was going to be a runaway.
That was me, sorry.
Today, Oliver, a melt up, and we're not getting that. I mean, we're about to be unchanged in the S&Ps, no news. So I think we're starting to get to those thinner air levels on the charts, as you might be looking at some resistance, some prior highs. But you have to think about, you know, clearly the inflation data can be a catalyst. Does it ultimately switch what happens on Wednesday? I'm not in the camp to believe so. I think it can really switch the press conference. It can change the language used by Jerome Powell and team and how they talk about the future. But that doesn't mean that the market's not going to react to those numbers. And so those numbers can be both optimistic or pessimistic, and they're going to get reaction. One thing that I think is quite interesting, though,
kind of trying to climb.
Your guys' story real quick, if I could. I think this speaks to how confident Tesla is in itself. If you're worried about GM and Ford and their vehicles they're going to be making, do you really want them to be able to plug into your established infrastructure, your kind of steps already ahead of those companies that you have? Clearly they're not. They're saying, no, please join us. We're going to build this together because we know our car's better.
Yeah, all right. It takes a real leader and real confidence to not be deterred, to share and to embrace the competition, right? Okay. Appreciate it, guys. Nice day here.
Camping World's getting a value rotation push, it seems.
Kind of hanging on by a little bit of a thread here. Thanks, Renita, Alex.
Thor's earnings, interesting.
All right, so let's bring in
It's
John
its own
Lewis,
earning.
talk about the economic situation. He's the chief economist at Morning Consult. John, what are your
Chill
thoughts
out,
on
Camping
next
World.
week? Do we have the answer already in front of us? The Fed gonna take a step back and let us be, no hikes?
I think the Fed will pause. I'm not sure that they should. I think I'm slightly in more of a hawkish camp because I think at some point they're going to need to raise rates again, and it's easier for them to do that now in the economy as opposed to waiting. I also think looking through the rest of the year that the upside risks certainly outweigh the downside risk in terms of where rates are headed. And so again, they might pause. I think they're going to do everything they can to signal that it's going to be a so-called hawkish pause, but that's going to be a challenging message for them to convey to markets.
What would that look like? I mean, how do they, if they say we might have to hike later, but we're not going to hike now, I mean, how could you possibly even spin it as a hawkish pause. You know, the idea that they would admit that we need to get another hike in, but not today. I mean, that's like, I feel like that's the most dovish thing you could possibly say. Admit that you need one, but don't do it.
It's one of the reasons I think it's probably it's imprudent for them to do that. Not saying that they won't, but I do think you're right that in order to maintain credibility that they are in fact data dependent. I think the data across the board has come in hotter than expected. I mean, we're showing here inflation expectations are rising again. Jobs numbers came in strong. Spending on an inflation adjusted basis is sort of level. But all in all, we've got a really hot economy. And I think you have to take the Fed's dual mandate at its face value, which is to say inflation is running hot, unemployment is pretty low. It's time to come back in and raise rates again.
Okay. And right now, the stock market for investors, is the stock market rallying because there is certainty on that pause, or is the stock market rallying despite the possibility that they might hike at some point?
It's been tough right now, I think, for investors to know exactly where rates are headed and to understand inflation dynamics.
Actually, since July 21.
I guess my take on it is that, just taking a step back, where we are in this sort of business cycle is we're in a period
I think GME is
economic
fixed.
Uncertainty, and that's driving a lot of the volatility that we're seeing in the markets. And so it
Do you
doesn't
agree?
surprise me that one day things are great and the next things are terrible.
Like,
that in fact
it's not
is reflective of
completing any more cycles,
which is late
no more
stage
rolling over.
cycle growth, and having a Fed again that is very data dependent. It's very easy for things to shift pretty dramatically from one day to the next, depending on how the data shakes out.
Okay.
We're starting to climb a little bit.
So what works from an investment perspective? Should we be then feeling more comfortable having a greater portion of risk assets?
A little head and shoulders here on the SPY.
And do we consider kind of the themes of 2022, stocks down, bonds down together? Have we moved beyond that as a risk to the portfolio?
Yeah, a little head and shoulders there. It's breaking the neckline.
Inflation essentially working its way up the income ladder. So that's the first biggest trend of seeing some of
Apron at the top of its channel.
Durables and discretionary
Break
items.
that.
That's where I think we'll start seeing the pullback both in demand and then subsequently in prices through the rest of this
There's
year.
the break of the neckline on the SPY.
We're clearly
Apron breaking to the upside on that channel.
Reallocation phase. So you have workers moving from companies to the other, from one company and industry to another. That's creating
Retesting the
a lot of
high.
volatility in the employment space, despite having a high, pretty robust net jobs creation. Again, I think that is likely to change fairly soon as we move away from reallocation to a downright pullback, but that's not where we are quite yet.
Okay. Consumer confidence and the American
Back up.
spender. What
See.
do you see
You
as
see a little head and shoulders there, though.
for the strength of the American consumer going forward? It's kind of a hard one to figure out because we see companies like Walmart doing well, but then it's like basically the only one. Companies like Target and even some of the discounters have struggled. But then we look at numbers for hotels and travel, and it's super high right now. So how do we think about that?
I think the right mental model is to think of a consumer that
Apron
is facing
can break this high of the day.
elevated levels of stress and elevated levels of vulnerability. So 2022 was a year of the consumer resilience. We had a lot of these negative shocks being thrown at the consumer, and they were able to withstand that by virtue of their strong excess savings and then their access to fairly cheap credit. Those two supporting factors are no longer working. Those have moved from tailwinds to headwinds, where the savings is really running out a lot, particularly at the lower end of the income spectrum, and the credit capacity is really limited going forward, both because of all the outstanding credit that consumers took on in 2022, and then on a go-forward basis because of elevated interest rates. And so again, I do think that
There it
the
is. Come on,
consumer
Apron.
space through the rest of the year is going to be particularly challenging. We're seeing it a lot in all of our proprietary data that it is
Close. 967. We got 973 for the high. There it is. 979. New high of the day on Apron. 986.
Not only the existing earnings, but also the earnings outlooks, which
Got here.
have pretty consistently been revised downwards over the course of the next year.
All right. like it, John, it sounds like we should have some expectations for kind of the continued slowness, but maybe without a major collapse in the economy.
Yeah, I think that's a fair characterization. There's no imminent threat right now, but we are in a spot of heightened vulnerability. So assuming that we get some other
50,
unexpected
the
negative
1035
economic shock, I don't
area.
think the economy is positioned right now to withstand that. Again, that's different than where we were even as early as
There it is, 1015 on apron.
banking crisis. We are
See, I told you. Good job, sir. Nice volume on that breakout too on apron. Still got 45 minutes. This thing very well could keep moving.
It's going to be a massive credit collapse. People wouldn't be able to get loans. Businesses wouldn't be able to get loans. Commercial real estate was going to blow up. There's some scary stuff people were saying after Silicon Valley Bank.
I think folks, by and large, were conflating sort of near-term event-driven issues with longer-term slow-burning trends. And so the commercial real estate issue is a very serious issue. It's unlikely to play out in overnight. I think that's a longer-term problem of
those levels.
Companies needing to reprice, renegotiate some of the
Here we
outstanding conditions there.
If you get some consolidation,
what was really
put this into support.
that we did not see the consumer affected by all
of
that
volume.
negative news. So trust in financial institutions stayed strong. Consumer confidence, their views of the
trust in institutions,
personal finances continued to improve. And I do think it's worth noting that all that happened during a period of slowing inflation. And so there were some macro tailwinds there that helped prop up the economy and the consumer.
Use it as support. You can do it.
Core PCE down to 2% is going to be very, very difficult. And I don't think that we're going to have some of those sort of macro tailwinds supporting us going forward.
All right.
Yes.
John, good setup here for the rest of our conversation this afternoon. Appreciate you joining.
My pleasure. Thanks for having me.
John Lear is the chief economist at Morning Consult. Coming back, let's talk some investing themes with the team at Exponential Investment Partners, and a little Apple in that conversation as the stock breaks out and holds it. An all-time record for Apple this week.
Target foot traffic has reportedly decreased dramatically. Surprise, surprise. Surprise, surprise, puppy surprise. Uber to launch Uber car share in Boston, which lets people rent their own cars for cash. Please. Yes, I want that. Turo is such trash. No reaction on the stock with that news. I was at 235. Let's see. Blink is working with Tesla. Blink charging. Big sell off today on Blink. Apron. Retesting that 1025. $10.47 just wow. I've got 1032 as a resistance, 1085, 1134. I'm holding these till Monday, regardless. Turo? Good Turo sucks, man. Just, yeah, sucks. I don't know. It's probably gotten better, but I doubt it. They don't have much competition. On the consumer side, it's great. Yeah, you can totally take advantage of Turo, take advantage of the people renting their cars. It's not great, but still like unorganized and just like weird. But as a renter on there, yeah, it sucks. Yeah, no, I've rented on there too. I've only rented on there like once or twice. I liked it alright. One time, or no, I guess 2 or 3 times. One time we got a van that the tranny went out. I don't know, but yeah, I've rented my vehicles on there for years. Road needs some competition. Happy to have Uber in that space. Told you he loved you because he thought he was texting you. Yeah, it's just kind of messy. And there's maybe not like a clean way to do it, I don't know. Apron, 10-15, it's up almost 90%. Nice break out of the highs. Nice volume. See this, just nice reverse split squeeze. I stay in this channel a bit. Can be some resistance in this whole area with all that volume. Richard Newton's. Yeah, I know. Pre January on GME, we could be back in that kind of cycle. I haven't studied it close enough to confirm that. I just know it's been fixed since January. The January cycles. 19 on apron. I don't know, man. We'll see. There's been some squeezy stuff on reverse splits, and apron has historical squeezy action. I mean, the COVID squeeze on apron was crazy. This and Zoom and Peloton, stocks were going nuts. I want to keep seeing it use that breakout as support. Gotta repaste my CPU this weekend. Hopefully that fixes it. Might try and downclock it some more too. downvolt it, undervolt it, whatever. That seems like kind of a patch for something else going on though. I can't believe I didn't average down. If I averaged down on my coin play, I could have easily been out by now with good profit. Oh well. Dish. Almost filled the gap. Was it J-Man cycle? January cycle? Alright, Argo's one. Go apron. He does it. Does it. Step at a time. Big fella. Look at the BP. I see you've got all this volume up here. What I was saying, it's going to be a lot of resistance. A lot of different resistances through here. Get above there then. Got a big vacuum up to like 25. Would be sick. Kind of wish it had options. Although options sometimes, I think, definitely manipulate the stock with them. I feel like some of the better runners don't have options. Just be fun to sell cover calls. Oh, I thought April used to have options.
Years past, as it doesn't seem like the consumer's hurting that much, but they're pulling back from discretionary spending. But Shopify's still doing okay so far this year.
Dude, this is probably going to get some hype over the weekend.
In there, weakening consumer spending.
Up almost 100% on Friday. If it holds any kind of level, that's huge.
In there, but we did see a big call buyer.
Hopeful at least.
Strike calls. Bought over 15,000 of those for an average debit of about $1.35. So that break even for this trader, 71.35 over the next 42 days, about 16% above the current share price. So you're going to need some extension of those gains that we've seen so far in 2023. But yeah, pretty shocking to see Shopify doing that well this year. We got
Profit taken on Mavis.
Target. It's reflective of the pullback from the overall consumer. So yeah, this trader thinks that
Palantir's got that big engulfing candle 2 days ago, so this might be a nice report actually.
$60, 180 being the high, and last year's high being around 110. It looks really impressive on the 1-year chart. Obviously, it's one of those where you pull back and you realize just how far it's fallen. And how far it would have to go back to regain those glory days. And it just seems like something that's still pretty hard to fathom, given that we know how much the growth of the business has slowed.
It has slowed, and the competition is so fierce in there.
Sure.
Between you know, the major players, Apple with their Apple Pay, we get the buy now, pay later aspect of it. We've got the Google Pay. I mean, competition's really heated in this space. And if you see any continuation of a pullback in consumer spending, that could dent the shares. But this trader, you know, we typically don't see massive size positioning in there as far as open interest goes. So this is pretty substantial here in Shopify.
Okay. Their next earnings in a couple months, late July. So they just gave the report, which sent it higher, and they were still on the bottom line, you know, slim, but they did pull off the break even. So even though revenue slowed, one of these companies, they're trying to shore up the bottom line.
Yeah, really low expectations going into that
project.
Sure. Bunch of negative commentary over the last 9 to 12 months. Yeah.
All right, Zoom. still not catching on. They tried to pitch AI.
Yeah.
They've tried to talk about putting new products into the offering suite, but I don't know, man. It just kind of seems like this is a video conferencing app that has competition embedded at Microsoft, at Alphabet, at Cisco.
Well, think about this. You just mentioned what's taking place in a lot of these companies. Shopify is a perfect example. The stocks that have been beaten down so severely in the latter stages of 2021 and into 2022, most of them
Back down.
up. Zoom shares
Getting some profit taken.
That's what I'm saying.
Like to see that use support.
You know, they did launch that
BBBYQ.
their smart companion, using generative AI, not really causing any ruffles in the stock there. They did report 3,580 customers contributing more than $100 grand a year last quarter. They had some good metrics. It wasn't a bad report. They make money, Oliver.
Yeah, they had net income positive.
Right.
And the street didn't expect that, which is why I'm kind of surprised.
Yeah, even RSI divergence in the 5-minute too. On apron.
I think that they understand.
Price action still looks all right though.
Of this conversation about Zoom Video is that the competition in this space is just heated.
Still early, still have 30 minutes.
You've got companies forcing
Expected something like this not till the last 10 minutes or something.
Getting used. Will
So hopefully it holds up
pull back towards the end
of
of the year
VWAP.
from some of these companies who've already said they're going to start cutting expenses. Well, maybe you don't need Zoom Video if you got people coming into the office every day or at least 3 times a week. Maybe you don't need that big suite of products that they offer. But that being said, maybe somebody thinking that we're going to see a rally in here and maybe Zoom Video catches up, because we did see a buyer out in the July 75 strike calls. They bought over 9,000 of those for an average debit of just about $1.30 on those. So the break even, 76.30 over the next 42 days. That's 13% above the current share price.
Another little head and shoulders there.
Volume about 2.5 times the normal daily average volume that we've seen over the last 5 trading sessions. So yeah, some people taking some shots here in Zoom Video, but we've seen this repeatedly about once or twice every quarter. We see some unusual option activity, usually to the call side here in Zoom Video. Hasn't not worked out for many of those whales that might be buying big positions in these names.
Yeah, all right. Someone's trying though.
Yeah.
Take another shot, see if it works. Good luck. Zoom has been dead money.
Yep.
Stuck down here on a year where everything else is rallying. All right, last one. How did this slip in? Okay, Shopify, Zoom, exciting tech comeback stories, and then Johnson Controls.
Yeah.
What's up with that?
Is this a name that people should be looking
Go.
at?
I don't know. JCI?
Nice dividend yield.
Okay,
Dip buyers, that's what I'm saying. It's kind of early for it to
trying to replace
totally flush. It really starts flushing now. That's really bad. You have a whole half hour of profit taking that could bring us way down.
That's right. 105,000
A little
employees
test of the breakout,
across the globe, 2,000
potentially.
locations in 6 continents. I mean, they're in the mix of everything in the industrial space, and now they're expanding their service-based industry as they set up.
There's still that RSI divergence on the 5-minute.
Buildings, for commercial buildings, for new buildings.
Not a whole lot of weight for those that short a time frame.
Big proponent of the infrastructure bill that was passed last year. We saw some gains in there. It's pulled back, consolidated a little bit, but their HVAC and fire and safety products bolstered their top line expansion. 9% CAGR over according to Truffus. So they do have some growth, but it's moderate growth, right? We're not seeing an explosion in this name at this point, but valuation not too bad against some of its competitors, which is like Honeywell. So you have to take that into consideration, but did see some unusual option activity in here. And this kind of stuck out to me. I know it's a little bit overlooked, but we don't typically see any massive volumes in a name like this, and we did today. They actually
starting
the position that they had.
down a bit.
They were long the June 62.5 calls. They
Head and shoulders there. I'm not going to trade it. There's only 20 minutes left.
October.
Could have a big flush down on the last 3 minutes.
For an average debit of $1.95. So that break even for this trader at 69.45 over the next 133 days. That's about 9% above the current share price. So they're giving they're extending duration.
Lagging.
Bullish position. That looks like it worked out because the stock did rise in that call volume. 28 times normal daily average volume. So this is why it kind of stuck out to me over the last 7 days or week of trading. This is 28 times that normal daily average volume. That
I took it. I like it.
big positioning here.
Give it to the short.
Giving themselves quite a bit of duration over 4 months in this position.
Wow. Better than this.
Interesting.
Yeah.
So maybe a slow and steady wins
Well.
the race type of thing.
Yeah.
Friday.
Still off the highs from COVID 2021.
Right.
But it's doing all right this year. Kind of a little change now. Coming back. A little bit of a slump. All right. Mixing it up along with the growth in the tech. Thanks, Tom. All right. Speaking of comeback stories, this market's full of them lately, and perhaps none more surprising than Blue Apron, which had a big move.
Tasty STI. Thank you, sir. Appreciate your dono, man. Delicious. Double espresso today. Thought of you, Tasty. Added even a little bit strong. That perfect little Friday strong. And hope you had a good week. Your weekend plans? Out street racing at STI or what?
Let's get nuts!
Barbecue. Look what you did, Tasty. Made barbecue pop above VWAP. Look at what you've done. You're proud of yourself. We're kind of holding. Not quite the breakout level, but a level. Oh, Batman with the STI disses. Try to speculate. Head gasket issues or what? Oh, those flat fours blow through head gaskets. Ringland failure. Yes. Those have inherently bad seal on the head gaskets too, right? Don't the head gaskets always blow on those? And then that causes other problems, of course, from the overheating. Yeah, I remember Ringland. But he always rebuilding his.
Blue Apron sold its operational infrastructure to Fresh Realm and received about $25 million of upfront cash, subject to certain adjustments. Now the
In a late Friday GME.
up to $25 million of value post achievements of certain milestones here.
GME.
Apron did repay all of its outstanding senior secured notes and became now debt-free through the proceeds gained from this deal. Now, the company has said as they move to operate in a more asset-light model, they further plan to streamline their business by aiming to cut their headcount, as well as some of these administrative expenses and drive additional costs.
You with the Jenny. The Jenny gifts.
But I think
Gifts.
those terms do sound
And trays. Look at you guys flexing your memberships.
beaten down so badly, but you have
That's what makes a Subaru a Subaru.
going to actually be a company that can make it in this market, frankly. This is one of the top mentioned short squeeze stocks on Reddit today.
Oh, snap.
Names like Carvana, I mean, Micro Vision, GameStop, Marathon Digital. And I think speaking to the fact that now it's up over 1,800% week to date, really then puts into perspective where the stock was, right? Because we're at 980 now. When you zoom out and you look at where it IPO'd, it was trading as high as $165 back in June of 2017. So that to me even diminishes the fact that we got as high as $10. But I also think with an air of caution, when you see a stock jump from like $1 to $10, there's the volatility there that we could see things then.
She's talking about 1,800% on Apron.
Stuck for the last, several months.
Did she forget that it just reverse split?
Right, for making some tough decisions.
Just looking at a chart that didn't adjust. Come on, Jenny.
Paying down
not the weekend yet.
Debt and getting to something more sustainable that could actually service the market that they have, which is a lot smaller than they hoped it would be, and that I think everyone thought it was going to be again back in like 2015, 2016. Is that fair?
An oil separator? Air oil separator? Really?
Trend that was really cool in 2016, and there's the
Oh, you mean like a catch can? I've never heard of it called an air oil separator. Like, what are you talking about? Yeah, you've got to get that credit case pressure out.
Thanks for the update. Jenny Horn on the short squeeze beat. Blue Apron.
Short squeeze beat. APRN. Look at that. Top mentioned on Reddit. Dang, dude. Maybe it's the top 10. Dude.
Companies have been able to flip the switch by making costs.
Where's it going back to levels we've seen pre-split? Maybe. I would like to see it be broken again. I haven't seen GME broken in almost a year. I just opened up a Palantir trade. Palantir. Ladder.
So how do you handle the trade?
It's Palantir. Man, I'm opening up a lot of positions. Guess the market seems high. July 12, 15. Put debit spread.
That thing traded up to 60, almost 67 last night after hours. This morning, hovered right around 60.
I hate you, Lords. Hate you, I hate you, I hate you. Barbecued up 2% above VWAP. How could Lords be unhappy? They called him an air oil separator. That's funny.
And that was the plan, as you mentioned to us. So nice trade. Want to make sure to follow back on it since we're on the subject of companies that got kind of squeezed, and then we'll see if they last more than a day with DocuSign fading back down. We got bonds dropping a little.
Yeah, I mean it's been nice. Had a nice rally, along with like 3 or 4 other stocks with a very similar chart.
Next week, is that the way you describe this trading environment?
My trade's bearish on it though. Head and shoulders, red engulfing candle, lots of volume. Kind of a top timer, I suppose, but I gave myself should be enough time. Middle of July. So been holding up well.
And even though we get CPI on Tuesday, that'll have no relevance whatsoever for what the Fed, announces on Wednesday. That may have a big impact, though, for what the curve looks like moving forward.
What do you think maybe we could be dealing with? I mean, could the bond curve kind of steepen out? We see yields climb a little bit, even if they're not super hawkish, because the idea is that they're supposed to be dovish.
Barbecue wanting to climb a little bit. Little rally there, Lords. Don't get excited. We need to get over 2340. That needs to be our support coming into the weekend. 2340 or bust.
That coupled with the May jobs number that we saw, that
be a wick down here.
Totally took that the opposite way as many of us.
Thanks, Lords.
That's absolutely going to give the Fed fuel to to potentially raise rates in July, which I think the market will price in pretty handily. We'll start to see rates, go up again, and we probably will see that curve widen out.
If we do see bonds sell off, how do you think the stock market responds at this point? What did you read, Scott, on how stocks are responding to yields at this point?
Well, given what we saw after the jobs announcement, the market loved it, and there wasn't really a big change in what the Fed expectations were. But if this is a hot number, I think that could be very, very cautionary for the overall market here, especially as we've all been talking about just the minimal market breadth right now, where you've got 5, 6, 7 stocks really leading the way. So if the Fed starts to get hawkish again, if there is a prolonged expectation of rates even staying the same and not cuts here, I think we take a short-term hit in the market. How much? You know, we definitely have some room we could give back. I don't think we would drop more than 2-3%, but I think that would be very bearish short-term for the market.
Okay. The weekend
348 coming up into 10 minute. Getting out of this play. I hate keep getting wrecked on the 10 minute.
Or did Binance and Coinbase finally blow it apart?
You know, I'm going to take the opposite side of that, and I actually spoke.
Barbecue moving up with a little volume there.
So this 26.5 to 27 area in Bitcoin has accumulated just a massive amount of volume. There has been more on-chain
Back on me, browser.
in the last 3 weeks than we've seen in years. That always, you know, when we see that, that is a precursor typically to a big move, to massive volatility. And we know that Bitcoin volatility, just like the rest of the market, has been very tame.
Let the market do its thing. Barbecue moving up. Come on, 2340. That's what we need.
Here. Bitcoin, you know, I'm not an uber bull, but what this has done in the face of the Binance and the Coinbase and the rest of the kind of overhang from the SEC, what this has done.
Nice volume there on it too.
I think we get a
Apron's holding up good. I like that.
All right, nice. Good combo, Scott. Like that perspective here. Appreciate it. Always giving us some good food for thought.
Have a great weekend.
Have a good one. Scott Bauer, CEO, Prosper Trading Academy. Got a great Schwab team coming up next to take us into the bell, close out the week. Kathy Jones and Nate Peterson.
Wow, there's the flush. That's what I was looking for on the head and shoulders. Oh well. That's the 10 minutes. See what happens here now.
Has some breathing room here.
Seeing different numbers for 2107 for you. Saw some let it rip. I missed my sell. Trade showing 2162. Let's see. Yeah, Weeble's going higher than E-Trade. Oh, there it is. What up? Oh, they're synced up. Now that I'm watching them, quick synced up. Webull is only 15 minutes behind if you haven't signed up for OTC trading. Barbecue is good for Sundays. So wise.
No recession, you're saying those 13-month of negative leading indicators, it's going to be different this time. You're also going to be saying with the inverted yield curve, it's different this time. And then you'd also be saying that out of
I've never asked her, Sweet Lou.
19 PE going forward on the S&P, that earnings estimates are not going to get hit. So therefore, we have experienced the full effect of the rate hikes from the Fed.
That would be dope, Trace.
To believe if you're going to put
Barbecuing on a Sunday with Icon.
What do you think, Kathy? How would you describe what percent of the impact of hikes?
Apron's still holding up. I think we might get some moves, Apron, next week. If it holds any kind of level like this into close, which looks like it will, we've only got 4 minutes.
Yeah, that's the idea, to see the lagged impact. And we know that the
Maybe barbecue.
Anywhere from 12 to 18 months, so we're about 15 months in. We have
Barbecue needs to
in the economy. We certainly
blast. Blasty blast.
Inflation numbers, so all's going in the right direction. I think what the Fed is focused on is not trying to execute a hard landing, not trying to have a repeat of the financial instability that we had in March in the banking sector, and trying to make sure that their policy is reasonably well calibrated. But again, keep in mind, even if they do nothing, if inflation's going down, real interest rates are going up, and that's a form of tightening, and they'll be doing QT. So just because there's no rate hike next week doesn't mean the Fed isn't still tightening.
The fact that there's kind of still an implicit tightening in the background without hikes is important. But do stocks seem to be bothered by that, Nate? What are we learning here about the stock market's relationship to bonds? Because I feel like at least it's gotten more nuanced the last 6 months.
That little gap up there. 21.99 on the barbecue.
But last year it was pretty directly inverse. Yields go up, stocks go down. Yields go down, stocks go up.
I'm melting down. We've got 5 minutes now.
So I guess we have added on one new framework potentially.
Well, you know, what we're learning here is that we're in a very unusual environment, unique, and it's really
22 cents. It'd be nice to break that. That is support.
Balance sheets from the central banks.
I'm melting down.
Begin to try to use some of those indicators that we had from the 80s.
Apron kind of selling off.
And apply them to here.
A little bit testing VWAP.
But I think the other thing that we learned is, you know, if you go back to April, the positioning was so bearish that there is so much importance in that, along with sentiment, that needs to be respected. And then I do believe that Nvidia's
Gold running to close. Got 4 minutes. I don't think we're gonna get much of a run.
Shifts in the supply demand dynamics there, that I think that has the ability to, you know, bring in.
I want to over that 2340. That's the level.
The Nasdaq 100, which had a 77 RSI coming in on Wednesday.
Maybe next week.
What does the credit market show as the understanding of kind of
Head and shoulders end up playing out there on SPY. You want to hold through that 10 minutes.
Did those earnings do anything?
Go anywhere there.
Compress credit spreads in the corporate market?
Not very much. They haven't moved a lot. They've been pretty low, though they've been creeping higher. And what you have to look at is kind of the dispersion between the lower end credits and the higher end credits. And we are seeing some widening in that spread between high and
Stop
low.
buying.
But overall, we still have
Not buying, dude.
Like a big
Doing
increase
demand.
in default rates, whether it be high yield or whether it be investment grade. So I think it's probably coming. That usually happens kind of all at once. And so we're kind of waiting to see. But what we are seeing is triple C's in the high yield are definitely lagging relative to the higher rated, the double B's, et cetera, within high yield. But it hasn't really moved sharply higher as you would expect if we are entering recession.
Okay. Next week, one last preview here. Start us off, Kathy, with the basic framework. I know you guys are looking for the pause. You're looking for it to basically be the end of the hike cycle. So does that mean even if he tries to talk up July as still being in play, you don't think that's going to be the case?
Well, we think it's in play. It's going to depend on the numbers, just as the Fed is data dependent. So wouldn't rule out a July rate hike, but I think there's a good argument to be made that policy is pretty restrictive right now. We get a couple of decent readings and some of those indicators that Nate was citing about the economy, leading indicators negative, et cetera. I wouldn't be surprised if we're at the end, either near or at the end.
Batman, all you have to do is try and make an order. That's all I had to do. Try and buy barbecue. Go to trades or whatever and try and buy it. And you'll have to just sign a disclosure. It'll prompt you to sign something. And then once you do that, you'll get real-time data. But you actually can't buy it on Webull. But you have to go through that process to get the real-time data.
Adjustments there, so I think maybe some of those expectations have faded. I think what they'd like
it's free, it's not like it costs anything.
The expectation is, hey, we get a pause and then maybe we get 25 more in July, but that's basically it. And so if you start to hear, something that's out of the ordinary there, we did see what happened with the Bank of Canada and Australia. If you get something like that, that could be a catalyst to go ahead and initiate some type of a consolidation move, maybe 1 to 3% to the downside. Let's not forget, we're in the month of June, second worst performing month historically. And
Can't believe I got calls on Beyond. What was I thinking? I'm crazy, man. Didn't even get a spread, I just got calls.
I think we got to be a little bit cautious heading into next week.
Okay, nice preview. Thank you, team. Kathy Jones and Nate Peterson here on Friday. Kathy, Chief Fixed Income Strategist. Nate's Director of Derivatives.
Guess I wanted unlimited upside.
Looking for the pause, maybe some talk, but ultimately, most likely, no action.
Barbecue up 2.5%. Coming into the bell. And you're fired.
That print comes in smoky and is the first.
There it is. There you have it. Barbecue up 2.5% today. 21.52. Didn't make back yesterday's gains. But did bottom out here. Sorts. Kind of looks like a bear flag, unfortunately. But time-wise, I think next week we should start seeing some ups. I really didn't like it breaking that 23.40 though. Everything was looking very similar to this area until that break. Now it looks a little different. At any rate, yeah, we can always wait for a news catalyst. Talking Horse deadline is on Sunday, so might hear something about it on Monday or Tuesday, which could be huge. Should give us kind of a base price potentially for the stock. SPY did a little breakout move this morning, sold off. I didn't go long here. I did go short here though. Held through this. Added actually up here. And then sold those puts down here. They're like 200% on those SPY dailies. And then futures sold here. One bad trade in the chop, and then went long here on this inverse head and shoulders. Close that out up here at VWAP. Couple tiny trades in here for like break even. Opened up a lot of trades today. I'll show you guys since I'm not going to do a video. Yeah, so here's the SPY. What is this stuff? Fired. Sold to close. Oh, these were the puts from yesterday, just were wordless. Oh yeah, I forgot I bought top. Got a put debit spread on Carvana, 2050 put debit spread for January. Yeah, for January. I'll be selling that on Monday. And then bought another one for July, 22.5, 15 put debit spread. Sold the top share, small loss. Here's the SPY puts. So bought 3 at 1050. So kind of where I was showing you, I think. Let's see, 1050. Yeah, right here. A little bit past the shoulder. A little late on that entry. And then bought 2 more at 1103. Yeah, a little early on that entry. It was just at VWAP. And then sold 1 at 1125. Wow, on that candle. Sold 1 on that candle. And then sold 5 on this candle. That's right, I did sell 1 pretty quick. Upstart. Do an upstart. Sold to close. Sold to close. What do I have on upstart? Puts. Oh yeah, I sold my puts on upstart. Small gain, tiny gain. There were weeklies. Beyond, I bought 2 calls for July 2014 strike. Beyond calls. Apron, about 100 shares on that breakout. Palantir. Put debit spreads 15-12 for July on Palantir. And Blue Apron selling off in extended hours. I think it could have a good move next week though. And I kind of did the same thing with the futures, where I did the SPY plays. I did the dailies also just because I wanted more exposure. So yeah, a lot of trading today. Weird. Apron, GME, nice rally today, up 5.5%. So still kind of filling this gap. This still looks bullish. Still kind of a bull flag. So might still continue to fill the gap next week. Barbecue. Yeah, again, up 2.5%, but the sell-off on Thursday was stupid. So still down on that. See what happens with that. And yeah, that's what I got. Hey Chris. Hey Chris. Thanks, Christopher. Have a great weekend. We had a good week. Thank you guys for the support. 53 likes, 56 likes. Appreciate it. Thank you, Tasty STI, for the dono, and Ace for the membership today. Hope you guys had a good week. Have a good weekend. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT. We can have a Twitter Spaces on there if you guys want to. If you guys want to chat, just let me know. We'll have a little chat, a little banter. That's at Happy Money YT, and our Discord is pinned in the chat. If you're not on there, jump on there. Thanks, Sweet Lou. See you on the yacht, homie. Thanks, Batman. Chris, you're just catching the end, buddy. Thanks, Christopher. Thanks, Trace. Thanks, Daniel. Thanks, Jez and Batman. Thank you, Trader. Hey, have a nice weekend. Hope for a barbecue, and it's a good time on Monday. Yeah, this might be the end of the end of the end. The end of the end? The end of the beginning of the rally. The end of the beginning. No. The beginning of the end. The beginning of the end of barbecue being a bad investment. That's what it is. Thanks, guys. Hope you enjoyed today, and we'll see you on socials. Peace out.